you all have had a chance to at least download the PDF with our year-end guide, whether you printed it out or whether you're just viewing it on screen. I'm going to try to follow that guide as closely as possible so that when we actually get to a section and you can take notes in that area, and then you'll have that to review when you're sitting down and actually running through your year-end seminar. So I'll kind of once in a while let you know where we're at on what page and let you take some notes. I'm not going to read everything in the manual word for word. I'm going to walk you through a lot of the screens and show you them and just point out certain things within the guide. It is going to be very helpful, particularly if this is your first year-end close, to read this guide from cover to cover and get a good understanding of where the information is. So we've got, we're just going to go ahead and get started. We don't have all of our attendees on, but I think people will kind of pop in, pop out. Once again, if you're having any issues, you can't get to the handout, you're seeing my screen but you can't hear me, you can't see the screen properly or things like that, go ahead and put something in the questions or in the chat section, and Jen will kind of keep an eye on that and let me know. And then what'll go ahead and happen is I'll answer those as we go along. I will take a break at the end of each module section, give everybody a few minutes to see if they have questions, and then we'll go ahead and answer and address them. If we get wrapped up into one, that's going to be quite lengthy. We may move on to the next section in the interest of time, and then I will address them or answer them, or if by some reason we don't have an answer for you online, we will follow up with you offline and get those answers for you. So the goal is that you walk away from this webinar with a comfort level at least of what you need to do for your year-end close, and at least be able to know how to navigate through our year-end close guide. So before we get started, if anyone's having an issue, please put something out in the chat here and we'll try to get it resolved. Otherwise, we're going to assume everybody is seeing the screen and hearing me. So in the year-end close guide, there is a index, and what I like about the online version, the PDF version, is that those are clickable links within the guide. So if you're a person who's only dealing with the general ledger year-end close, instead of having to scroll through the whole document or find that page number, you can click on it and it will take you to that section within the guide. So first thing I want to point out is it actually doesn't have a page number, but right after the index is our support information. So it lets you know how to get a hold of our support team. And if you want our assistance with helping you with year-end close, whether it's a fiscal or a calendar year-end close, or you need assistance in applying the year-end update from a payroll and or 1099 tax purpose, and you have not reached out to our support team yet and set up an appointment, please do so as soon as possible, as we are getting our support staff booked out, and we want to make sure that we are able to accommodate the requests that you have within a timely fashion. So there's information on getting a hold of the support team, as well as if you have to get a hold of the Microsoft Help Desk, there is information on their normal hours and time and how to reach out to them. So we've got some general tips and reminders on page 5. Just a couple things of note, that if you are a payroll client, we do have the ACA changes that we'll be talking about this afternoon. If you are a payroll client dealing with the employee self-service, we've got some changes. There are no changes to the W-2s or W-3 forms for this year, but there is an electronic file change. So if you are a payroll client who's doing the electronic file, there are some changes to that. 1099s, dividends, interest, and miscellaneous have form changes. So if you print 1099s out of GP, then you should plan on getting the year-end update applied, which is a service pack. And if you absolutely cannot, then reach out to our support team and they'll have a potential workaround for you to get you through those printing of those 1099s. You can also reach out to your CAM. So if you have communication with your CAM and you reach out to them, they will make sure that we get somebody assisting you with that. And the one thing to note is the year-end update pertains to GP versions 2013 and 2015. So if you were on a prior version, you will not get that tax update. So you'll either need to upgrade or you'll have to work with our team for a workaround to deal with that situation. The manual is based on you being on GP version 2013 or 2015, but it will work for 2010 and below. It's just the navigation may be slightly different. But you should be able to use this guide to get through your year-end. There is a Payables 1096 form. Basically, if you're printing your 1099s out of GP, you can also print the 1096. And if you are one of our fixed asset clients who are using fixed assets within GP, and you have a luxury auto depreciation, there is a luxury auto depreciation change. So you also would be one of those people that would want to plan on having that year-end update applied. All right, I'm flipping the page. I'm on page 6 and page 7. There's some remainders of our tips. I'm going to talk about the backups now, and then I'm not going to go into any detail with them after this. I'll just point out when you should have a backup. Plan on having your IT staff or whoever handles your backups available during these closing times, because there are several occasions where you will want to have a backup taken before you do a close. It is also a good time for you to talk to your IT staff and find out what is your current backup procedure. Is your GP databases being backed up in a timely fashion? Is it you're doing a full backup every night, you're keeping 5 days on the server? Are you doing transaction log dumps, meaning you can do a point-in-time recovery? So if you do full backups the night before and you're doing transaction log dumps between 7 in the morning and 7 at night every hour, then the most you could ever lose as far as recovery is whatever you did within that hour of your last backup. So figure out how much time you can afford to lose, and then set your backups accordingly. If you don't do a high volume of transactions, a nightly backup may be a fine recovery point for you. If you are in an environment where there's thousands of transactions being done in an hour, you probably can't afford to tell an employee at 3 o'clock in the afternoon that, hey, we have to back up to our backup the night before, and you have to recreate what you've done for the last 6 hours. So have that discussion if you don't know what your backup plan is, and if you need any assistance in talking through a backup strategy, you can reach out to your CAM, or you can reach out to our support team, and they would be they would happily help you come up with a good, proper backup strategy and work with your IT support team in order to get that implemented. So let's talk about timing. It is true that a lot of the modules within GP, because GP is very much date-driven, are not as sensitive to time, but there are certain areas in every module that are very much sensitive to when you close it. So in each instance, we will talk about the things that are affected by doing a close at the proper time. There are other areas where if you don't get it right at calendar year end or right at fiscal year end, certain things will be affected and certain things won't. So this will help you sit down with your staff and plan your closings properly. We're going to talk about the history. Year end is usually a good time to start thinking about potentially purging history or getting file maintenance routines properly done. My philosophy in the history is if you have the space and your system is not running extremely slow, then I am a big fan of keeping history. I think that's the benefit of having a program like this where you can go back and inquiry and see a lot of history. But if you feel like you're getting limited in your space, or you find that when you do a maintenance routine like file maintenance checklinks or service packs, because you have a huge amount of history, it delays the whole progress, or you're getting a very large database, then reach out to your CAM or our support team, and they can give you some best practices in how to properly purge some of that history. Clearly, it's optional. It is not required to remove any history in the system. But if you bring up a historical inquiry screen, and it might take a minute or two to bring the records back, or the searches are taking an enormous amount of time, it may be time either to upgrade your hardware, which would be my first suggestion, or to maybe purge some of that data so your system runs a little more smoothly. File maintenance, there are clients that will run file maintenance on a routine basis, like once a month, as part of their kind of monthly closes or procedures. And there's also clients where the only time it gets done is when you're working with our support team and there's been an error and we're assisting you in resolving that error, or we're applying a service pack or an update. We usually run the check links at that time. And what the check links does is basically there are redundant tables within GP with information. They all have their own unique information, but the same record can exist in one form or another in 10, 15 tables or more. And they are linked together by key records. So what the check links does is it goes out there and knows the relationship that all of these tables should have with each other. And it just makes sure that you don't have maybe part of a record in your open table and another part in your work table or open or history. It makes sure that all of your records for a particular entry all exist in the same type of environment. And there is a navigation on there. The one thing with check links is it's best to be done when everybody is out of the system. Some of the check links you have to run when people are out, and you have a backup. It doesn't do you any good to do a backup and run through a maintenance routine or a close and still have people in the system and then have to go back and restore from that backup, because those people who have been working since your backup will lose data if you have to restore to your backup. So any of the closes and the routines and the utilities and the file maintenance we talk about today, best practice is to have everyone out of the system and have a backup before you perform them. All right, our year-end closing sequence. So the proper order of closing is to close the inventory, close the receivables, close the payables, close the fixed assets, and then the general ledger is the last one. There are not closes for sales order processing and purchase order processing modules, but there are steps that are typically done at year end that we'll talk about. There's also a few manufacturing steps that get done, but those modules do not have set closes, but routines that might be a good time to run. So we are on page 8 if you're trying to follow along in the guide. And like I said, I'll do my best to stay on task with the guide so that you have a proper way to take notes. So there are reconciliation routines that we will talk about and talk about running when we get to these closes. And basically, any reconcile process, whether we're doing it in sales order, purchase orders, inventory, or project accounting, what they are designed to do is recreate your summary numbers. So in GP, we have historical detailed tables and we have summary numbers. So if we go into, and I'm just going to utilize inventory because that is the module that we will be working with first, but if we go into our cards inventory and we go to quantity insights and we bring up an item, and over here in our quantities we see on hand and allocated and sold and on order. All of those are actually pulling your data off of summary tables that get updated every time a transaction related to this item number takes place. So it's not calculating those numbers off of detailed records in our tables every time you open this screen. So what can happen is, particularly if you have a posting error, what can happen is those summary numbers sometimes get out of sync. So we'll get calls where somebody will say, hey, I'm going in there and it says I have 4 allocated, but when I go ahead and click on there, I don't see that 4 are allocated. It only shows 2. I can't see them allocated on my numbers. In this case, this is proper. There are 2 of them allocated that are existing on sales orders and invoices. And I can zoom in on that document and see if it's proper. But sometimes those numbers will get out of sync. So what we suggest, or what we'll have you do, is run a reconciliation routine. And reconciliation routines basically zero out the summary tables. It goes out there and reads every detailed table, and it recreates those numbers off of actual transactions that it finds. So we will have a process where we run through them, and the proper order is, if you are a distribution client, you would want to run the sales order one first, then the purchase order, then the inventory, and there also happens to be a project accounting. There are reconciliation ones in receivables and payables, and we will talk about them when the time comes. All right, so before we start in on actual procedures for modules, I'm just going to give everyone a minute or two to see if there's any questions on any of kind of the overview stuff and the general stuff we talked about, because I'm not going to go into detail about any of those things when we actually come across them. I'll just say, okay, backup, file maintenance, and things like that. So I just want to make sure that there are no questions on kind of any of those overview general topics that we just discussed. And just so you know, once in a while someone will have to ask a question so that I know I'm not talking to myself the whole time. So don't be shy. We won't call you out. We'll just address your question, and honestly, no question is dumb. We've got people that have gone through these year-end closes every year, and this is just a refresher, and I'm sure we have people on the line who have never gone through a year-end close. So don't be afraid to ask.
Pam, this is Jen. I'm watching the questions box for you too.
All right, good.
I see one. How do you clear the summary tables so inventory count shows accurately?
Right, so that will be covered in, when we get to the inventory, I will walk you through that reconciliation. You would run a reconcile. So I will walk you through that in the section. Good question. We'll cover that.
And one more. If you don't use a particular module, such as inventory, do you have to close?
Good question. If you are not using it and you don't even have cards in there and you don't have summary numbers, great question. No, you do not have to close a module that you are not currently using. You just, if inventory was the first one, you will skip on.
Thanks,
All
Pam.
right. Okay. Now, for those of you who do not have the distribution module, the next half hour probably will be just covered on the distribution module. I'm not, if you feel the need to step away for a half hour, that's fine. I won't feel insulted, and I probably won't know that you even stepped away. But I can't promise you that 10 o'clock we're starting on the other modules for sure. So if you do have to step away, maybe about 10 o'clock, just kind of peek back in and see where we're at. We may get the topic, if there's not a lot of questions, I may get the topic done sooner, and I will move on. I'm not going to wait on it, but feel free to maybe step away if you're just a financial user, because we will be covering sales order, purchase order, and inventory, the distribution series. All right, if you're following along in the guide, I am on page 10. And these are considered optional when you're talking about the sales order and the purchase order, because there's no real close. These are just things that we suggest you address at year end, because year end is a good time to do it. Some of these things are done monthly or quarterly or at other times throughout the year by some of our clients. So if you're a fairly new user and you're questioning whether you should be running these more frequently in your organization, that's a good discussion to have with your CAM or the support team. And a lot has to do with if you're a client who has a lot of posting interruptions, or maybe you have a high volume of transactions that go through your system. These are probably worthwhile to run a little more often than just at year end. So for the sales order, we are going to reconcile our sales documents. We're going to remove our completed sales documents, and then we're going to print any kind of month-end reports that we need. So let's kind of walk through that step. There is full navigation and full step-by-step discussion in the manual. So you shouldn't have to take notes in too many areas. So we are in our inventory, and we have several different ways we can navigate to it. In the manual, it will walk you through navigating with our drop-downs. So I am going to actually walk you through navigating it through our navigation pane, and that's where we come over here in our left-hand side, and I'm going to click on inventory, and now I can see all of my pallets, and it's very easy then for me to select in utilities my reconcile. And then I messed up. I went to inventory instead of sales. All right, sales, utilities, reconcile. All right. Oops, I did receivable. Reconcile, remove sales documents. So the one above that is the receivables reconciliation. We will cover that at the receivables. So this one is sales order processing. And basically what it does is it goes out there and it will look at all of our sales documents that we have out there. And what it's going to do is it's going to look and see if maybe a subtotal got off. So sometimes if you're ever trying to post something or you're saving it, and you'll get an error that says your subtotal doesn't equal. That's where you'd want to come in here, and instead of running it for all documents, you would select that document, and then you would select to reconcile the sales document. And what it does is it re-looks at the amounts allocated, the amounts to invoice, the back orders, the subtotals, the sales tax to make sure the detail equals the summary. So it's looking at all of those to tie those out. And so this screen, we actually can do two different functions on here. We can do the reconcile, which is what we just talked about. And then we can also remove completed documents. Two processes, two different things that it runs, and they do have to be run separately. You can't mark both of them. So the removed completed documents, basically what that does is in the normal process of a sales order, when you, or a quote, or a back order, when you transfer things, and that particular order or back order or quote gets fully transferred. It's either all the lines get moved to a back order or all the lines get moved to an invoice. In that process, it will move that order to history. So it takes it out of the open tables and puts it in history. It does not, remove completed documents does not mean it's deleting these documents. It means it's moving them to history so they don't show up in my open. So if you've got orders in your open and you're saying, this is fully done, then you'd want to come in here and actually run this process just for the document, and it will put it in history. The reasons an order can hang out there is, let's say you have 3 line items and 2 of them you transfer to an invoice, and then the 3rd one ends up needing to be canceled. So you can go in there and you can cancel your quantity, but by default, the document doesn't automatically move because the process to remove them is normally done during the transfer process. And we're not running the transfer. We went in and edited the line and canceled it. So we have to come in here in order to get that document out of open, and we have to run this remove completed documents for it. Now, if I don't select a range and I say all, it's only going to remove the ones that meet the criteria. So it's not going to remove all of them in the range. It has to be a document that has been fully fulfilled or canceled, and there's nothing left to do on that document. Now let's say I'm a little uncertain. My first time running this, I'm a little hesitant. I can mark these and I can say print report only, and I will get a report that says which documents are going to get removed. And then if I'm comfortable with that, I can come back in here and unmark the print report only and actually run the process. So we're going to just kind of run these real quickly so you can see the process. I'm not going to say report only. It will give me a report, but I'm comfortable in doing my process. And it is a good thing to have a backup before you run this, unless if you're running it just one document at a time, probably no need to have a backup. But if you're doing this as a monthly process, either print your report ahead of time and view it, or have a backup in case you get results that you're not expecting. So basically what it's going to tell me is it's going to tell me things where it changed the adjusted total. And these issues are just by pennies, but it's telling me everything that's going to adjust. And it's very typical to have the remaining subtotal adjusted. A lot of other things you see, potentially a tax amount gets off. The other thing you would see where it's maybe changing a committed quantity. If you get this report and you are unclear what something means, you can reach out to our support team and they'll help you walk through that, particularly if you're not used to running it and you're a little uncertain. Now that screen does close when we do that, so we do have to launch it again if we plan on running another routine. So I'm going to remove my completed documents. And there was none that were hung up out there. So you might refer a terminology as there's a sales order hung out there or something to that effect. Basically it means it's been fully taken care of, but it didn't automatically move to history. And so that's where we go in and get it moved to history. So that was all documented, the steps I just went through on page 10 and 11 for you. And then the step 3 on page 12 is basically, okay, after you do that, then it's a good time to kind of run your reports. You reconciled your numbers, things are all in sync, so if you have any reports that you run, they do suggest a couple of reports, a sales document analysis, inventory sales report, sales transaction history, things like that. Most of these reports can be run at any time, so they don't necessarily have to be done at month end, but they're reports that they're suggesting you may want to run. I've got a lot of clients that will print these to PDF, which is a good game plan if you're not uncertain of whether you're going to use the report or not. That way you don't waste a ream of paper, printing a report, 3-hole punch it, put it on a binder on your shelf, and you never look at it. So if you want to have that comfort level of having those, you know, print them to PDFs, but the majority of these reports, other than ones we specifically specify, can be run and rerun at any point in time. Any quick questions on the sales order process before we move on to purchase order, which is going to be a very similar process? I'll give it a minute, plus it gives me a chance to have a sip of my coffee. All right, we'll move on to purchase order. If you think of something, and you know, go ahead and reach out at any point. Basically, you know, if I move on to purchase order and all of a sudden you have a thing like, oh, I got a question about sales order. If we've already covered it, feel free to reach out and ask it, even though we've moved on to a section, because I know certain things don't immediately come to you. So if you have a question, ask. It helps me stay a little more focused instead of me just staring at my machine talking to nobody in particular. All right, page 13 in the manual, if you're following along, hopefully you are. Purchase order processing. Once again, this is optional. These are also things that we suggest you maybe do on a monthly basis. So this is kind of a good checklist on a monthly basis. Reconcile the purchase documents, remove the completed purchase orders, and then the month-end reports. So very similar to sales order, the purchase order reconcile does some of the same things. It looks at subtotals, extended costs, remaining quantities, statuses of lines, trade discounts. Make sure the on order values in your inventory tie out to actual purchase orders. So it's basically looking at all that stuff and recreating that summary information off of what it finds in the details. All right, so page 14 walks you through this. I'm going to bring it up and I will walk you through it. Like once again, I'm not reading this manual word for word. That would be probably boring for all of us. My job is to kind of talk about the subject and show it to you on the screen so you have a comfort level when you're running it. But I do strongly suggest that you do read this manual because there might be a few things that I didn't point out. I'll do my best to point everything out, but it is important that you do follow through and read the manual. So I'm going to click over here on our purchasing. And then once again, this particular function resides in utilities. And once again, the first reconcile is for payables. The second one is actually our purchasing. And this screen is called Reconcile Purchasing Documents. And in this case, this process here only has one function to it. And if we pick option 1, it will reconcile and print us the report, or we can choose to print the report only. So once again, it allows us an opportunity to run this process, see the results before we actually apply the process. This can be run by a document basis. If you find you have a document and the subtotals are incorrect, at any point in time you can come in here and just run it for that document. That's one of those ones where I don't feel you need to have a backup in place for that, but I do suggest that you maybe have a backup in place when you're running this on a full basis of all your purchase orders. So I'm going to run this reconcile and print report. Now there's two steps. There's a separate step to move these to history. So this one is purely doing the reconciliation. We have another step that walks us through moving purchase orders. So we're going to go ahead and we're going to click process here. And we did not have anything that needed to be changed. So all of my purchase orders in my system, everything tied out. If you have any questions about any of them, like it said, if it fixes a subtotal, it's going to tell you. If it changes a status of a line, it's going to tell you. If there's anything it's telling you that you're uncomfortable with or you're not sure why it did it and things like that, reach out to our support team. They'd be more than happy to kind of walk you through these things. But most of the time, these things it just fixes the things that are out of sync. You don't usually have to take an action unless you're uncomfortable with the results. The next step we have, which I believe is on page 15, is the remove completed purchase orders. So there are certain modules in GP that once things get fully applied or fully allocated or fully paid, they automatically move to the history tables. So GP has work tables, open tables, and history tables. Work tables are usually transactions that exist in unposted batches. Open tables mean a little bit different as to what's in them based on your module, but usually they mean things that haven't been fully applied or been moved to history. In the purchase order environment, purchase orders that are fully allocated or canceled or dealt with do not automatically move to history. And there's reasons behind that. They don't automatically move to history because the system wants to allow you an opportunity to potentially do a return on your purchase order. So if the minute you did a receipt for all of your line items, the PO went to history, then you would not be able to do a return on it if in the event that one needs to be done. So what happens is the system will fully apply all the lines, but that purchase order still stays out in your open. So you have to determine organizationally how often you want to move these completed purchase orders to history. And it's only going to remove the ones that either have been fully received or canceled, which means the line item status can't still be open. You also would have to cancel a line. A lot of times you'll have where you have done a receipt, but it has not been matched to your invoice. So I get a lot of questions from clients of how do I clear those out? And the bottom line is when you have receipts that you've received, but you have not matched the invoices and you no longer want that out there, if you want to completely remove it, because let's say sometimes what happens is you get the payables invoice in and your purchasing person keys it into payables and go ahead and process it where they did not go through the matched invoice process to link it to the receipt. So if you need to remove those, you have to go into the edit purchase documents and you will have to go into that line status to clean those up. And basically what you would do is you would go to that line and the line would basically say received. You'd have to come in here and you would mark it as canceled. And then you would go ahead and it would change the status of the purchase order. And then basically this PO would be ready to be closed out when we remove the purchasing documents out of the open and move them to history. Now you would still have one more step you would need to do, because when you do a receipt, typically if you do the receipt as a separate process from the invoice, you will hit an expense account or you will hit the inventory control account, and the other side of the entry will go into an accrued purchases. So what happens is then if you manually go in and put the payable in, you will probably hit that expense account again, or you probably would hit the inventory control account again if you put it in directly to payables. And so you've overstated either of those and you still have a dollar amount in your accrued purchases. So what you would need to do is if you close this out and you still have a receipt hanging out there, you'll probably have to do a journal entry to move it out of accrued purchases and deal with whether your inventory was overstated or vice versa. So if you need some assistance in walking through that process, our support team would be more than happy in helping you clear that out. But that is another process that we don't necessarily have detailed through here, but it is something that we get asked a lot. There is a smart list that will tell you, and part of your month-end process should be tying out your accrued purchases accounts. So you should be going in here and looking at these and tying these out. And I believe if we go to our there is one in here. I just have to purchasing line items. Okay, so in our purchasing, and I'm going to expand this just a little bit. In our purchasing and then our receiving line items, there's a shipments received but not invoices. In a perfect world, this dollar amount should equal what's in your accrued purchases. And a lot of times clients will ask me, hey, this is hung up out there, how do I address it? So this is where you would do what I said. If you do not want to create and match an invoice to it, you go in, you cancel the line, and then you have to double check if there's any general ledger thing that you have to deal with. So it takes a little bit of research sometimes to know if you have to do a journal entry to clear this out of accrued purchases. Once you've done that, then that PO basically would be fully addressed, and then it would be one of the POs that's going to get moved to history when you run our next routine. Another option is to go ahead and match it to your invoice, let it flow through to payables, and then do a void on that payables transaction. So if you need any assistance in trying to determine the best way to clean these out, go ahead and reach out to our support team. So let's walk through our reconcile or remove completed documents. Now that is not in our utilities palette like the previous, it's in our routines. And we're going to bring that up. And now you can do this one document at a time if you know you have one and you don't want to deal with all the other ones, but you want to get this one out of your open table and move it to history. Keep in mind, once a document's in history, you can no longer do returns on it. You can no longer add lines to it. You would have to issue a different PO with a different number at that point if you needed to address that. And it also removes your ability to do a returns through the return process on this particular PO line and have that line reopen in order to repurchase. So we're going to put in our range. You have to put a range, and in this case we don't have any POs. This is the sample company. But what you would do is you would select the beginning of all your open POs, the end of all your open POs, and insert it in the restrictions. Now, it is not going to remove every PO that is in that range. It's only going to remove the POs where every line is either completed or canceled. All right, that will take us to page 16 where we've got the print reports. They have some suggested reports there, just like the sales order. I don't know too many clients that actually print these reports out per se, but one of the things I do suggest is number 1 in step 3, which is the received not invoiced report. It is very important if you are one of the clients that do your shipment invoices together, you'll never have the accrued purchase issue. But if you have a separate receipt process from the invoice process, it is very important to tie out this account. And if you keep it up monthly, you can keep those issues cleaned up and you won't have issues. Now, you could potentially have a small timing at month-end difference, but you should be able to determine that. All right, I'm going to open it up for any questions on the purchase order processing, the processes we went through, questions on any of that before we move on to the inventory control.
Pam, I don't see you coming in, but I had one person who lost audio, so they're going to hop off and then join back in, just so you know.
Okay. Is anyone out there feeling like I am going too quickly? Please let me know. I unfortunately know this topic sometimes like the back of my hand, and I sometimes get going and forget about kind of staying on the steps in the manual. So if you're having trouble following what I'm saying with what we have in the manual and you feel like I'm deviating too much, let me know and I will try to do a better job. Otherwise, I'm going to assume everybody is following along and that we're going at a good pace.
I had one comment, Pam, that the pace is good, so I think you're doing a great job. Thank you.
All right, we will take a break around 10:30. Obviously, if you have to take a break and you need to step away, I'm not going to know that you did. But we will take probably a 10-minute break around the 10:30 time frame for anybody who needs to step away. Plus, I'm sure I will need to take a small break. So just so you know, that's kind of where we're gauging, is kind of around the 10:30 time frame for a 10-minute break. Otherwise, we'll keep going as long as I can keep going, and please chime in if you have any questions. So inventory control, page 17, if you're following along in the manual. Let's talk about the steps that we do. We normally want to make sure we post all the transactions for the year. Hopefully that's kind of a given for you, that if you want to close a year out, you want to have all your transactions that you want in that year. Inventory control is always a fiscal close. There is no calendar close for inventory control. And let me just specify for anybody out there who doesn't know how to discern between their calendar and their fiscal. So if your financial year end is 12/31, then your fiscal year end close and your calendar year end close will always take place together. They are, however, separate routines for the modules that have both a fiscal and a calendar. And we will talk about that, but they are separate routines. If you are a client who has any other date other than the 12/31 for your fiscal year end close, you will be doing these at different times during the year. For the modules that have a calendar one, that's always done at the end of the calendar year, and the other ones are done at the end of the fiscal year. So sometimes that seems pretty obvious, but for people that haven't worked in GP before, I just want to make sure that we get that clarified. And most people are afraid to ask that question because it makes them feel stupid. So I'm putting it out there for all of you that were wondering. So we're going to post the transactions. We're going to reconcile our quantities. Great time for a physical inventory. Most clients who are dealing with inventory do a full physical inventory this time of year, even if they have done cycle counts throughout the year. Print reports, make your backup, close the year, and then we're going to talk about our fiscal periods. We can do a soft close to our fiscal periods. So let's walk through that in detail. So step 1 on page 17, post all the transactions for the year. Now, the things that are affected by your inventory control we're going to talk about. And so it doesn't mean you can't have a inventory batch out there dated for the new year. What we really have to control is the posting. So if we're dealing with inventory, it goes to say that we want all of our sales invoices for the year posted because they affect our inventory. We want any purchase orders or receipts hanging out there, or receipts to inventory, anything affecting inventory that needs to get into that year, you want to address those in those subsidiaries. That's why those modules we kind of talk about before inventory. If we absolutely have things that we have to get into the system, let's say we have a sales invoice that we need to get out there and get to a client, we can still maintain a good inventory number at our fiscal close as long as we don't post that batch. So it's kind of a matter of transactions can be in there but not posted in order to get the clean cutoff. And if we can't get a clean cutoff, we're going to talk about what those risks are so you can see if, hey, how important is that clean cutoff to our organization. So page 18. First thing is the reconcile of inventory. If you're doing inventory and you're not running this monthly, it is absolutely critical that you run that at year end. And the reason being is a lot of these reports and a lot of these summary numbers that we move from this year to last year are coming from those summary buckets. They're not coming from the detail. Detailed records are always driven off of your date. Summary records are always driven off of when you do the closes. So we want to get accurate numbers before we close it out. And we talked about what the reconcile does in the items, and basically it's clearing out all those summary numbers and it's regenerating them based on the detail in the detail tables that it finds. Now, this is another good one, to have your backup before you run this. This one, depending on how many SKUs you have in the system, could take a little bit of time. And if you're going to include, I suggest if you run this at the monthly, you may want to exclude your item history if it takes too long and you're on a time crunch. But I do suggest always, if you're running this at year end, that you include the item history. And just keep in mind that this could take a little bit of time to run. So don't run this and say, okay, everybody get out of the system for 5 minutes. It probably is going to run more than 5 minutes. Now I'm going to run this. I'm in the sample company. It will actually get done probably within the 5 minutes. But we're going to go ahead and process this. Now if during the year you have an issue with just one item, so let's say you have your inventory control person come up and let you know that an item, and I'm just going to show you a different way to get to the quantities and sites. I navigated there directly before, but this time I'm going to do my go-to. And I'm going to go to quantity and sites. So same window, just different way to navigate to it. So let's say you've got your salesperson or your inventory person or whatever coming to you and saying, hey, this number isn't right. I'm looking at this number and it says we've got so many on hand or allocated or whatnot. Then let's say it says there's 10 on hand, but you run a stock status and it shows 9 and things like that. So if you get somebody alerting you to the fact that these summary numbers don't seem to coincide with the detail, then you can run that reconcile just on that one number to try to get it fixed. Don't necessarily have to kick people off the system. Don't necessarily have to have your backup, but I would not have them post any inventory type transactions while you're running this, because you don't know if they're running it based on what's affected by that item number. So let's go back in and let's go ahead and run this, and we're going to run it for the full range of items. We're going to include our item history. The fortunate thing about that is the sample company does not have a whole lot of history. So you can see there's a couple different reports that it runs. So it's actually looking at, if you're running manufacturing, it will run the PICLIX Reconcile Inventory Allocation Report. So it's making sure that the things that are existing on your manufacturing pick list, it's re-looking at those numbers and making sure that that allocation is proper. So a couple of reports I had popping up there, and it's going to go run through the process. So while this is running, like I said, it'll only take a couple minutes, but if anybody's got any questions, they can reach out. Otherwise, we'll just let this run, and we'll move on to the next step. Our next step basically is physical inventory count, and whether you do that outside of GP or whether you utilize our stock calendar counts in order to do it within there, year end is always a good time. And it goes without saying that we want to run all of these reconciliations and all this stuff that we just did so we get accurate numbers. So when we're going out and counting, we're counting off of numbers that the system says, and they're accurate based on our detailed transactions. So let's step back and take a look. Our screen output came out here. And some things that are on there, it's basically updating the purchase receipt sequences, Right here we've got a back order quantity's been adjusted. Something probably was canceled or it didn't recognize a back order, and now it's realizing that this back order quantity is actually should be 1 instead of a 0. So if you have any questions on any of the adjustments that it makes on this report, once again, reach out to our support team. They'd be more than happy to talk to you about what it means, what it's doing, and if you need any further action, or if it's basically the system just corrected it for you and you can move on. There is no issues with my pick list reconcile for my manufacturing orders, as well as the reconcile report. So once again, any results on there you're unfamiliar with, you don't understand, you don't know how to handle, we're here to help you with those. So we have two methods that we can deal with our physical inventory, and the one is using our stock count procedure through GP. Another one is to just put in manual inventory adjustments based on you reconciling quantity on hand with counted quantity. A lot of people use reports out of GP, Excel spreadsheets. They figure out the adjustment and they go in and manually key in their inventory transaction. We do list out both reports. I am just going to kind of briefly show you those windows and then see if you have any specific questions. If somebody needs it covered in a little more detail, I'll take a couple minutes to cover it. Otherwise, I won't spend the time going through all of that today. But basically, we have the ability to create what are stock count calendars. And basically, something within the system, and you can have as many of these count IDs as you want, where you're giving it a name, and basically you're saying these are all the items within this stock count that I want to count. It allows you to do a mass add of these items, so you have all sorts of criteria that you can quickly add items to this count. Or you can manually key in the couple that are based on this. And one of the key things in there, if you're a cycle counter, is to be able to do it by that ABC code. So that's how we're able to just pull out certain items for a lot of our cycle counts. The nice thing about the calendar is it's reusable. So once you get these items in here, you come in here and when you're ready to start a count, you bring, well, let's say you already have this created, you bring it up and you say start count. Now what that start count does is it immediately goes out there and gets a captured quantity for the item. So it freezes that item within the stock count transaction window so that you can count it. It does not freeze the transaction from you posting entries. So you still have to control that people are not going about normal business for these items while you're trying to get a count on it. But what it does, I'll go ahead and do my start count real quick. And basically there's reports that you can run. You can run stock count reports to send out to the warehouse and things within GP. So if you want to use GP stock count forms, there are options there. So I had no exceptions found, which means it was able to capture the quantity. Some of the exceptions you might get is maybe this item is not assigned to the warehouse or a bin number, and it can't create it because it doesn't have something to capture. You have to fix those before you can start your count. So what it does is I now have a stock count entry, and if I bring that up, there's the one I just created, and what it did for me is it now went out there, and for this particular one, it has a captured quantity of 1, and now it's going to allow me to put in a count on it, and it will automatically do a variance for me. And then if that, once that variance is verified, and I mark verified, so let's say I go in and I'm going to do a count of 1 on this one, and I'm going to say verified, so this one gave me no variance, but let's say down here I have 101 of this. I now have a variance of -2. And if I have this marked as verified, and I go about posting this, which I can put the auto post variance, then this will produce the inventory variance adjustment automatically. So what I can do is I can mark auto post, and then I have to have every one of my lines marked as verified. And then if I go up and click process, and I'm going to do this for you in a minute, it will create the inventory transaction for me. Now, one of the things it also lets you do is based on an individual item. So if I'm on an item here, I can look at the transaction history, or I can look at any unposted transactions out there, because maybe those explain the variance, and maybe we have some difference between when we counted it and when we captured it that would explain our variance. So it goes out there and it lets me look at all my unposted transactions, and maybe that helps me verify the variance. It also lets me look at the transaction history. So maybe something that took place helps me explain what happened. And this is on the particular day, so it defaults to the day that I'm doing the count. So sometimes our variance, you can go back and say, oh, because of that, they should have counted 103. Maybe they pulled 2 off the shelf, did not process the transaction, so the counters only counted 101, but within the system, you actually do have 103. In which case we can adjust this to 103 and it would remove our variance. Once we're comfortable with all of our accounts, we mark the auto post. We have a document date. The distribution accounts should all default in, but if you want to send it to a different account other than the default from the inventory item, you can do that. That's by a line-by-line basis. If you're dealing with serial and lot numbers and you make adjustments and counts, you do have to go to that screen and verify which serial or lot that you deal with. If you are a multi-bin customer, you do have to go into the bin window. These line items are based on individual bins. So if you had an item in 2 different bins, you would see the item show up twice in 2 different bins. So these counts are bin specific. In GP 2013 and 2015, you are allowed a reason code within GP, so you can create a reason code on these or you don't. That is optional, but that will flow through to the inventory transaction. So I'm going to go ahead and process this. This basically shows me the inventory transaction that it created and the transaction DL register. And if there's a cost variance, and the general ledger posted. Now, the reason these posted all the way through instead of going out to my inventory was based on my posting setting. I have my posting setting within inventory to flow all the way through. If you have it set to post separately, then it would go out there as an inventory control account adjustment, and you would have to go in and post it separately. In this case, the setting posted all the way through to the general ledger. So if you do this and you want it to go to the inventory, but then you do want to go in and verify or print stuff there before you post it, make sure your posting settings are set properly. All right. So that's through the stock count. The other way is pretty straightforward, which is to just go into your transactions, transaction entry and inventory, variance, and you would key in your plus or minuses. If you are keying in a plus and you are not using the standard cost, you do need to put in a cost amount. It will default to your recent current cost, but you can either accept that or put in a different cost. If you are minusing it, you are not allowed to put in the cost. It will pull it from your layered inventory appropriately. All right, that is our inventory. And then we've got step 4 on page 19 that talks about additional reports. Keep in mind that if you do use the turnover report, that is affected by the calendar close. It will be incorrect if your fiscal year-end close for inventory. It will be incorrect, that report, if you don't close at the proper time. So the activity for the historical stock status purchase report, turnover report, is very much controlled by that. Once again, if you're uncertain, I suggest you print them to PDF until you realize whether you do need these reports or not. Step 5 is to make a backup, and then we're going to go ahead and close the year. So let's talk about what happens during closing the year. There are a couple things that happen in our inventory control, and based on how we select these options, control some of the things that gets done. So it can transfer all of our summarized current year quantities to history. So that's kind of the summary stuff. It updates the item's beginning quantity to the quantity on hand at each site. So certain reports, like I mentioned, the turnover report, are very affected by these. It zeroes out the quantity sold field. So when we were in an inventory item here, and I'm going to go through the item maintenance once again using the go-to, and we go here, this quantity sold gets zeroed out. That is based on your year-end close. You have the opportunity to remove purchase receipts for items that have been completely sold. You have the opportunity to remove discontinued items. We'll talk about what those are. And you have the opportunity to remove any lot numbered layers and attributes that have been fully sold. And then you can update the standard cost for each item if to the current cost if you're using the FIFO periodic or LIFO periodic. Keep in mind that if you are a manufacturing client, you do not do this in manufacturing. If you click on it and you're a manufacturing client, it will tell you you're a manufacturing client, you don't do this in here. There is a manufacturing routine that updates those costs. So let's kind of walk through the process and talk about each one of our options. So the discontinued items, what that is in inventory, if your type is a sales inventory type, and you no longer are going to purchase or sell that item, depending on whether it's a component item or a sales item, then what you can do is mark it as discontinued. And what that will allow you to do is sell the remaining quantity or consume it via an assembly or BOM or kit, but it will not allow you to enter or receive new stock. So it allows you the opportunity to get down to a zero quantity on the item. So what this does is if I click on that, what it's saying is if I have an item that is discontinued and it now no longer has a zero balance, so everything's been sold, then and the quantity on hand is zero, then it will remove it. Now keep in mind that history on it through the sales module, receivable module, and things like that will still stay there. It does not remove the history, but the item will no longer show up in your item inquiry. But you will still have maintained some of the history in some of the other sales and things that it was used in. The other option is our sold lot attributes. So what we can do there is if a lot has been fully sold, then it will remove those attribute values. And then the third one on here, we actually have a date range we can put in, which is the sold receipts and cost change history prior to. What that allows us to do is if we get layered inventory for our receipts, and if everything in that receipt has been fully sold, at some point we might want to remove that history. So maybe we only want to keep 2 years worth of receipt history. So we can mark this, and if we mark this, then we can put in a date range to say purge it as of this date. Once again, I'm a big fan of keeping history. So if this isn't an issue when every time you go into receipts, now if you go into receipts inquiry or run receipt reports consistently, and all of that extra sold layers of inventory are just kind of bogging down what you're doing, then it is a good time to clean this up. It'll make your inquiry and things like that faster and cleaner. But I do suggest that you put in a date that's prior. Year, 2, 3 years, whatever. Then down here, if you're not a manufacturing client, we can click on item standard cost. If I do have manufacturing loaded on here, I'm going to leave this on just so you can see the message. But let's go ahead and mark some of these. And then I'm going to back this up. Now, my current date is 4/12 of 2017 within the system. So basically, by putting in 12/31/2015, it is backdating it for me. So you can see where it says use standard cost in the standard cost roll-up window. So that's where I have to unmark that. So I just wanted to show you that it will flag you if you try to do it and you are a manufacturing client. So that is all covered, page 20, page 21. There's an explanation of everything that I just kind of quickly walked you through. So this does not have a report. So let's say all of a sudden you're like, well, what happened? Did it do it? One of the ways you can check if a process is still running is by going up into Microsoft Dynamics GP, and then you go to your process monitor, and if it was still running, you would see items in here that are still running. So in this case, I can see it didn't truly fall into place. The other way you can kind of double check is, well, I'm going to navigate the other way so you see a couple of different views. I can go into my quantities and my sites, and you can see the quantity sold will be zeroed out for all of these items. So that's another way you can kind of tell. There won't be anything in the quantity sold. All right, so once again, inventory is done at your fiscal year end. The other thing is we're going to talk about the fiscal periods. So hopefully those people who stepped away for the distribution series are back online, because the closing of the fiscal periods goes across all the modules. Now, we do not have monthly closes, but we do have what are called soft closes. So one way to control, because our system is date driven, so just because we close in our minds January and we're working in February, if somebody is entering and they're not paying as much attention as maybe they should, or what usually happens in January is people will put in the January date, but they put in 2015 because they're not geared to 2016 yet. So the system, as long as that fiscal period is open and you have it marked to post to history in the GL, it will post it back in those days. So we can kind of control that by our fiscal periods. And so what we can do basically is kind of close those periods off, and it's kind of what's called a soft close because nothing really takes place. But we can go in and click on these and close these months out once we complete a month, so that nothing can take place in there. So once we, and I would do this on a monthly basis as well as obviously year end, but once we've issued our financial statement or have determined that we don't want anything in here, we kind of do our soft close. And the other thing that a lot of clients will do, and I'd suggest, is we keep the future periods. So what we're doing, and we would mark all of these, so we could do a close all and then open up the one period, but basically what we're doing is saying that this is the only period you can put the date in because this is what we're working on. So certainly at year end, we suggest that once you do the year end close for inventory, you go down to that last period and close it out. Now hopefully you've closed them out on a monthly basis up until that point. The other option is when we create new fiscal calendars, then a lot of times we'll close those out until we're ready to use them. So one of the things with year-end close is you got to make sure you have a calendar for the new year. Now in our sample company, we've got 2018, so I'm going to show you how to create 2019. So we go in and we add it, and then what happens is based on my other calendar, the system kind of knows that this should be what my fiscal year is because it's kind of got the history behind the other calendars. And I've already marked it that I've got 12 periods. So I can change the dates if appropriately, or I come up here and I'm going to say calculate. And what the system's going to do is it now created my new fiscal calendar. But if this is in the future, personally, I would go in and I would mark them all because I don't want anybody accidentally key encoding there and putting them in. And I'll open these up when the time comes. So that's kind of how you can control. The other thing is, if I have any of these that are marked, and the sample company doesn't have them marked, but typically in a live environment you would have historical years, and once in a company will get marked as a historical year as part of year-end close. Do not go in here and mark this yourselves, because it has not gone through the year-end close routine. Now, when we first bring you online, we may put years in, do journal entries, and then mark it. But in the normal process, you never mark the historical year yourself. But once a year is marked as historical and you have the period open and you're allowing posting to the historical year, it will post. So that's kind of the fiscal periods. I'm not really going to cover that in the other modules, but we will talk about it in all the other modules. So just a couple of tips. Bottom of page 22 starts some tips. Page 23 gives you some frequently asked questions. We're not going to cover those. Those are for there for you to read and review. But basically, they tell you they're talking about reports. There is no year-end closing report for inventory, which I talked about. So don't expect anything there. All right. And so if you just kind of continue on page 23, you've got how is average cost update done, how is the standard cost update done, how does it handle the discontinued items, what are the effects if you run a late year-end closing, top of page 25. That's basically just telling you what's going to be affected if you can't get it done right on time. And it really comes down to those summary windows that I talked to you about and a couple of reports. Turnover report being one of them. All right, so I'm going to open it up for questions, and then we're pretty close to the 10:30 mark. So let's address questions, and then I'll let everybody take a break before we do receivables, payables, and general ledger, which is our financial series, which probably should encompass just about everybody in the group. So any questions on any of the distribution series that we covered?
Thanks, Pam. I have a few questions for you. Someone on the webinar said that they use the report received, not invoiced, but it's not the SmartList one. Are they the same?
They are the same. They are the same. They're coming from the same table. They're pulling the same information. The report should give you the same detail the SmartList does.
Okay.
So utilizing that report will give you the same results. It's just whatever works better for you and what's more convenient for you.
Next question. How do you flag an inventory level for order or reorder, I guess? I think order. How do you flag an inventory level for order?
I'm a little unclear of what's being asked on that, unless somebody wants to know how do you know if it's dropped below the minimum stock level. Whoever asked that question, if you could just chime in and clarify, that would be helpful. If it's a matter of how do you know if it's below restock level, there's a couple different things you can do. There are some smart lists out there that are already there that kind of give you an idea of item quantities. There's one where it's below its reorder point quantity. Now that means you have to put in an order point quantity, but there's already a smart list created out there that's very helpful to let you know these things. If that's a little bit different, then I just need whoever asked the question to maybe chime in and give me a little more detail. All right, so feel free to put some more questions out there during break, and we will address them right after break.
I have two more for you real quick, Pam.
Oh, great. Go ahead. Let's do them before we break.
Can more than one person enter a count in the same stock count ID at one time?
So I think the question would be, if I run the stock count. So if I go into inventory here, if I'm understanding the question, and I go to the stock count entry, so I already created the schedule, and I'm in here, and I'm looking at a vet. Well, I got to recreate a stock count real quick because just bear with me. I processed that one all the way through, so I got to start a new count. I don't need that report. I don't know why I did that. And I go into my stock count entry. I think the question is, can we both be in the stock count ID at the same time? And I'm going to answer that by technically the system would let you do it. However, I wouldn't suggest that as being a best practice. Even though you may be entering stuff, different items, what I would suggest is that they get split up into different stock count IDs. Just because the potential exists that one person puts in a counted quantity for one, verifies it, another one goes in and puts something differently. The system in itself, unless somebody's on an actual line, what it would do is if you were both on the same line, it would kind of get into the holding pattern where whichever one came first, it would process it. When you went to save it, you may get an error that says somebody else has already updated this document, so you could have an issue with it saving both of them separately. So my personal preference and best practice would be to not have multiple people entering count quantities in the same count ID. I would suggest you split them up. But technically the system would let you do it as long as you weren't working on the same transaction.
Thanks, Pam. Next question. If you remove a discounted item and find one through a cycle count, are you able to count it back through a variance transaction or stock count? You need me to repeat that one?
Yeah, I think what they're saying is we removed it. If we remove it, it won't show up in a stock count ID. And if it exists in a stock count ID, it won't let you remove it. So if it is in a stock count that's been out there for a while, technically the system would let you type in the item number. It won't let you look it up. It no longer will be part of the lookup, but it would let you type it in. If for some reason you found the quantities in there, basically what you would do is you would plug in the number in inventory and you could reset it up in the item card. But the system should not allow you to remove the discounted item if it exists on a stock count with a captured or entered quantity. And I don't know if that entirely answered the question. If not, please, whoever sent the question, just follow up with.
We did, Pam, we got a little bit more information here. They found an item on the floor, but it had already been marked as discontinued before the count. So I guess they're wondering if they should just toggle off the discontinued button on the card or what to do with it.
Yes, that's how I would handle that. So the item hasn't been removed. It was just marked as discontinued. Yes, I would unmark it, let your adjusting entry go through, and then you could mark it after that adjusting entry goes through.
Thanks, Pam. One more question.
Okay.
Somebody mentions that they've seen where the canned R&I report does not match the SmartList R&I report. And they've seen some comments on the GP community to this as well. Is there a way that you can find out which columns in the canned report is pulling, as it seems to be more accurate, but they like to use the SmartList report better?
Yeah, the canned report is probably pulling not from summarized columns. It's generating it based on the actual transactions in the table. So this goes back to, if you're seeing that, I would run those reconciliation routines. So a lot of the smart lists are generated, a lot of those things come from summary numbers. So the reason you're seeing discrepancies is because most reports, actual reports, the majority of the actual reports run based on going out to the table, the transaction level tables, not the summary tables, and calculating those values off of posted transactions in there. Whereas some of the smart lists, in order to make it process quicker, smart lists that are looking at things like this item quantities, these are buckets. These things like this are summary. If I ran something similar within a report, it probably is pulling based on detail. So what I would suggest on that is that you're frequently running those routines. And I'm not sure I understand what they mean exactly by the R. Did they say RI report?
RNI.
Yeah, if that
Received,
doesn't
not invoiced, maybe?
Oh, got it. The received not invoice. Yeah, the received not invoice is some of the same things. The smart list is probably doing these, and we'll just bring that up. I suspect. Whoops, that's actually in purchase line receiving transactions. So what they're saying is this one here, there's a discrepancy. So the quantity shipped, quantity matched, quantity rejected, those would be coming from more of a summary. So here's what happens is smart lists are using what are called SQL views. And those SQL views actually summarize the data. And I would have to look at this specific view to be certain, but I suspect the view is using the summary numbers on these versus calculating them off of the detail. Whereas the report does not use SQL views, it goes out to all of the tables and refigures it out. So smart lists use a lot of SQL views, if you're familiar with them, and that's where a bunch of tables are added together and summarized. If you're seeing those discrepancies, my suggestion is to run the reconciliation on your modules, doing the sales order, purchase order, and then inventory, and then if they still don't tie out, double check and make sure the report you're running is not a modified one. And the way you can tell if a report is modified is if you go up to your Microsoft Dynamics GP and you go into Tools, Customize, and you go to Customization Maintenance, all of your modified reports and things will be listed here. If it's a modified report, it could be that a change was made on there that is changing what that looks like. But it is one of the drawbacks because smart lists use a lot of summary tables. Most of the reports within GP are date driven and they go out and recalculate as part of the process. But the smart list, I'm sure the smart list is based on a SQL query, a view in SQL. All right, we got anything else?
No, just wanted to make sure, did you make sure you covered how you clear the summary table so inventory count shows are accurate?
Yes, we did.
Okay, thank you.
That's through the reconcile. We ran the reconciliation process.
Okay.
All right.
Let's take a break.
Let's take a break till about 10:45. That gives us about 8-minute break here. And we'll cover receivables, we'll cover payables, and we'll cover the general ledger. And, you know, we're shooting for taking that break between 11:30 and 12, and then we'll reconvene for the, and I'll stay online and address any of the questions. And then once we have all the questions answered, we'll go offline and we'll reconvene for any of the payroll clients.
Great. Thanks, Pam.
About if they have two different Scout IDs for the same site ID. If you have two counts on a particular item and they're in the same warehouse and you're not doing bins, you shouldn't really have an item exist in two different stock counts unless they are in different sites and or different bins. If they're counting from this exact same location, they shouldn't exist in more than one stock count. So unless you've got them in different locations in the warehouse and you're using bins, because what the problem is the system is only going to capture your quantity once. So the example was one person counted 3 and then another person counted 2, and it's possible they are in different areas of the warehouse, but you're not using bins to designate that. As long as you're paying attention, because the problem you would have is the system would capture 5 and then you would show a stock count of 3 and it wants to adjust 2, and then the other person has it on theirs and they put in 3, it's going to show the adjustment of 2. So if you were automatically using that stock count entry to create your inventory adjustments, you would have a problem if the same item was in two different stock count IDs in the same location. So I would suggest, if that's the case, I mean, it's fine to do that to just get people's counts, but you're going to have to tweak that adjustment or your variances will be incorrect. So hopefully that answered the long question that came through for the inventory. If not, you could send me a separate email as a follow-up and I can try to address it for you.
Thanks, Pam.
All right, let's move on to receivables. Now, receivables and payables that we're going to cover have some similarities about them in what they do. And they also have both a calendar close and a fiscal close. Now, from a receivable standpoint, the only thing that is affected by the calendar close is your year-to-date finance charges. The rest of your summary numbers are handled as part of the fiscal close as opposed to the calendar. So there are some things that are affected by when we make this close, which is why we try to close it on a proper date. And those things are some smart list objects. A lot of the summary smart list objects are affected by when you do your closes. There are receivable management summary reports that are affected by those closes, and we do list out some of those summary reports. And then there is one inquiry view within your receivables that are affected. So let's talk about our inquiry windows. If we go into the summary for a particular customer and we bring up a customer and we look at this summary view that says amount since last close, everything down here in the year-to-date column is affected by either our calendar close or our fiscal close. So all of these on this screen, when we close our fiscal year, will move from year-to-date to last year's bucket. Finance charges on this screen, when you do a calendar close, move from year-to-date to last year. Now, if, however, I don't use this view and I actually go to either my fiscal year view or my calendar year view, they are not affected by when you do the close. They are always driven off of the date range that you put in. You can see right now there's nothing in here because these things get calculated on the fly from the detail transactions. So this view or this view are not affected by when I do that close. So let's kind of walk through this and let's get a clear understanding of what's affected and what not. Now when I talk about that amount since last close view, that is the same when we go to a vendor. So the checklist for what we're going to do for receivables, and for those of you who not sure where we're at in the guide, we're on page 26. And this is listed as optional, and we say optional. It's optional to the extent you use any of the reports or smart list or summary window that we just talked about. So if all of your reports are driven off of the detail date range, if you don't use the summary smart list, and we'll have a list of which buckets those are, then yes, technically the receivables management year-end close is optional. We do suggest that you do the closes and you do them at the year-end closes, meaning you have completed all the transactions for 1 year and have not posted any new transactions. So our checklist: post all the sales and receivables transactions for the year, create a backup, close the year, close your fiscal periods, and close the tax year. So let's walk through that. Step 1 is the sales and receivables transactions for the year. So basically, what we mentioned before, that it's okay to have entries in there for the new year as long as they're not posted. They're not going to affect that summary view numbers that we talked about. But if you are looking at any of those, then you really want to make sure that that timing is correct. So let's walk through this. I'm actually going to be on on page 28 is that summary window that I just walked you through. Starting on page 29 toward the bottom, there is a listing of all of the summary smart list things dealing with receivables that are affected by that close. So if you use any of the smart lists that are using these columns, then be aware that they are very much affected by when you make these closes. The items with an asterisk are affected by the calendar year end close. Those are dealing with finance charges. All the rest of them get rolled over as part of your fiscal year end close. So just be aware. So when I say it's optional to the extent that you don't utilize any of these things that are affected by this. So when you're looking at this and you're looking at the columns, and you look at these available columns and you try to match it out, you can see on here it's high balance, life to date, year to date. So when you go, they directly relate to these columns in here. So any of these columns listed, like this one I have highlighted, the one below it, the one below it. So if you have smart lists that are utilizing any of these columns in this list, then you want to make sure you get that fiscal year end close with a proper cutoff. All right, so let's talk about what we're doing with the close. So our navigation to that, it's in our routines palette, and we have our year end close. And once again, obviously, we want to make sure we have a backup. Anytime we're doing a backup that we want to be able to recover from, it goes to say you probably don't want people in the system continuing to post transaction. Now, do you need to kick them out of the system to run this? No, but you don't want them posting transactions. So the best way is to have them out if you can't control whether they're going to post or not. So here's our year-end close. So we have the option of closing all, just the fiscal, or just the calendar. If you are a client that has a 12/31 fiscal, then you can do both. Otherwise, these are handled separately. However, if you are a client that does not do finance charges, there's no reason to come in here and run the calendar close. You can just come in and run all and close them both at the time you close your fiscal. The print report is not like our utilities where it prints a report but doesn't do anything. This is just saying, do I want the year-end close report? So this runs, you can't do a precursor to this. It will close the process. I do not suggest that you go down here in your system date and close it to your year-end date. I got clients that will go in and put in their year-end date even though it's 10 days later. The system up here on last closing date is the actual date, the actual user date. I suggest for purposes of audit trail or maybe having to troubleshoot a close that did not work properly, that you let this time date stamp this based on the actual day and you do not go down and edit your user date. So if you're following along, I'm on step 3 on page 31. You cannot reprint this report that goes with the close. So if you want it printed, make sure you mark it. I don't know too many clients that actually use it. All it is a printout of those summary numbers, what was in the bucket. I've told clients over the years, go ahead and print it to PDF in case you need it. I don't know anybody offhand that's actually gone back and referred to it. But there's no harm in printing it to a PDF and storing it with all the rest of your year-end documents. So the calendar year-end close details, if you start on page 31, it shows you which customer summary windows that are affected by it. And then it turns around and reiterates which customer summary windows are affected by the fiscal year. So let's go ahead and hit our process on this one. I'm going to close both of them in this case. It's basically giving me one more chance to decide whether I do want to close it or not. This is not a reversible process, so if you do it and it doesn't need to be done, your recourse would be, if you use any of those summary numbers the way the system is saying, you would need to restore from a backup. Does not have the ability. So here's the report. I'm going to run it to screen. And here you can see it's basically showing year-to-date what it was. So what will happen after the close is all these year-to-date numbers will now fall into last year. It can be quite lengthy of a report depending on how many vendors you have. So it also does sales, a salesman report, as well as a sales territory report. So it is rolling those sales numbers forward for your salesmen. So when you do an inquiry on their numbers, those are getting rolled as part of this process. All right, so the other thing, close the fiscal periods like we talked about. That's step 4 on page 33. So go in there and do that soft close on your sales series. And that takes us to step 5, which is to close the tax year. The tax year is optional, but there are year-to-date reports on there that are affected by that close. So there is a report that you can print that shows year-to-date sales tax in each jurisdiction. If that's not a report that you typically run, then the tax year truly is an optional type thing. The other thing is if you are one of the clients that are actually tracking use tax from a purchasing standpoint within the system, you do not want to close this tax year yet. You want to close it as part of your payables process. So that is in our calendar palette. So sales tax is always a calendar function. A company function, because sales tax can be not only tracked in the sales module but also the purchasing module. So it's in our company palette with similar things like credit cards that are used in both modules, payment terms, shipping methods, things like that. So anything that kind of has a place in more than one type module is usually in your company palette. So we are going to go to routines underneath our company, and the company stuff, if you're using your navigation pane, is always under the administration. So here's our tax year end close. In this case, this one does have the ability to just print the report as well as do the close year. So this is a process that you can see the report first. And so basically our report with this one is just kind of showing year-to-date sales tax for all of our jurisdictions. All right. So it reminds you that basically the year-end close report, well, actually I skipped a process, sorry. You got close the tax year. Oh, we already closed the year. Yeah, basically, I'm sorry, on the page 34, it's kind of walking you through some year-end minders and some tips and tricks. And for those of you who actually have a printed manual, some of the bullet point numbers are out of sync, but the PDF should have them in the right order. But it's basically telling you cannot reprint the year-end close report. We've talked about that before. And then starting on page 34, just kind of tells you how to handle when you print your December statements. If you are somebody who has to include year-to-date finance charges, please read through this section. It will show you how to properly get that year-to-date number on your customer statements. Starting on page 36, well, actually, the rest half of 36 is receivables management. It continues on with your statements, and then it goes right into your year-end closing tips. So you might want to read through those closing tips and see if those are any issues that you need to address. So at this point, I'm going to open up any questions about the receivables module before we move on to payables, but there are... Okay, hold on. I got to cancel my phone for a second here.
Hi, you've reached 608-845-5781. If you wish to leave a message for Pam, press 1. If you wish to leave a message for Sean, press 2.
All right, I apologize. Still have a landline. So it's very similar in the payables module and some of the closing. So when we go through that, we will, we're not going to address some of the similarities in detail, but we will cover every step. So floor is open for receivables management year end. Once again, there is a fiscal and a calendar. The calendar close affects finance charges, year-to-date finance charges. The fiscal one affects all of your other summary numbers.
Pam, it's Jen. I don't see any questions coming in quite yet for this one.
Okay. All right. We will move on to the payables. If you still have a receivables question, feel free to put it in. We'll still address it, but let's move on to payables. So payables management, very similar, has a calendar close and a fiscal. And we list it as optional in the sense of it's the same thing. If you don't use some of the smart list objects, you don't use some of the summary reports, and you don't look at the amount since last close view, technically you could get away without closing. But however, proper procedure and good habit is to close these modules. So let's talk about, we have a master year-end closing list, and that's if you're going to close your fiscal year and your calendar year at the same time, you want to use the checklist starting on page 37. And basically that's, and this is figuring out that you're going to close your calendar and your fiscal, and you're printing your 1099s. If you are doing a calendar year-end close only, you want to use the checklist on page 38. As well as we have a checklist if you're closing strictly the fiscal year-end close. The calendar year-end close moves your 1099 summary numbers. The fiscal moves all the rest of your payable summary numbers. However, the calendar close does not affect your ability to print proper 1099s. 1099s are generated from date-driven data in the system. So it's irrelevant of when you actually close your calendar close. The summary number in your amount since last viewed is affected. So if you are in here and you're looking at your summary number in here, and we go to yearly, this 1099 amount in this box will move to last year based on that close, so that is affected. However, like we discussed before, fiscal calendar views are not, as well as the 1099 edit window that is actually generating the 1099s. This is date driven, so your 1099s will always be correct no matter when you close that. But if you use that amount since last close, or you're one of the people that might go into the smart list and might go in here and might actually run a 1099 year-to-date summary number from the smart list, that is affected also by the close. So just keep in mind which summary numbers are affected. So let's walk through these steps. Step 1, page 39, post all the transactions for the year. So once again, and the common one that happens here is people like to hold the payables open because they got more vouchers coming in for the year, but they have to cut checks for the new year. So what I tell them is go ahead and bring in as many of those vouchers with the dates on them as you can, and hold off closing your payables until you have to post that check for the new year. So you can run a check run in a calendar year for the new calendar year as long as you don't post it and still have accurate 1099 summary numbers, because vouchers can still be entered for the new year, because if you remember, 1099s are based on payments. So until you cut payments with a date for the new year, you can leave it open and then close it properly for your calendar year. For your fiscal year, you want to close it before you post any vouchers and/or payments for that fiscal year. So that timing is a little more critical. So what is affected is that amount since last close view in the vendor summary window. There are smart list objects and there are vendor summary reports. Some of the vendor summary reports is the vendor credit summary window is affected. You can go in there and manually update those fields, however, from year to date to last year if the amounts are not correct. So that's one thing we really haven't talked about, is if for some reason you have to do the close and then there's one more, or you close it and you got to add several ones in, you are able to go into here in this summary window, and in your amount since last close, you are able to manually edit. You are able to manually edit these numbers if they're incorrect. Now keep in mind that if you run a reconcile on your vendors, and I just realized I didn't address the reconcile for the sales, for the customers. So I'll talk about the main reconciliation for the vendor and customer numbers at the end of this section. But You can edit these if they're incorrect. Keep in mind, if you run a reconcile, it will recreate these based on posted transactions. So there is a way to fix it if somehow you close it and those numbers aren't correct. Page 40 starts talking about which smart list columns are affected. The asterisk ones, which are basically your 1099 information, is calendar year. Otherwise, the other ones are based on your fiscal year. And then the vendor summary report, one of the main ones that is affected is if you do the reports purchasing and the analysis report. Step 2 on page 42 is to print the historical age trial balance. I do suggest that you do this monthly to try to tie it out to your general ledger. I do suggest obviously at year end, but I also suggest it monthly. And you want to run the historical age trial balance, not just the trial balance. Because what happens with that is that allows you to go back to a date and time and get an accurate snapshot of what your balance was in order to tie it out to the general ledger. So not only run this report yearly to tie out, but you should be running this and tying it out to the general ledger monthly. Step 3 is a vendor period analysis report. To be honest with you, I also do not know a client that actually utilizes this. This is basically a report with all of the summary numbers for the vendors. If you do think you need it, print it to PDF. Once again, you can always print out one page of a vendor or just view it without having to print reams of paper. Step 4 is install the year-end date. It's marked as optional. However, it's not optional in my mind if you have to print the 1099 forms, because this year there are changes. However, with that said, there is a workaround in the sense that a new field has been added for foreign tax, and if you're not a customer that needs that, your form within GP from last year should print properly on the new forms for this year. I do, however, suggest that the service pack as a good practice gets installed and that we're not getting behind on there in order to print our forms properly. So the year-end update is a service pack update, which means we have to apply the service pack to the server as well as all the workstations that GP is loaded on. So don't wait till the last minute on that, and if you need Crestwood's assistance, I strongly urge you to get something set up if you haven't already, or at least let us know when you're doing it so someone would be available on call in case you run into issues. Step 5 is suggesting to make a backup before you edit your 1099s. That's one of those that in my mind is fairly optional. Hopefully you don't need to edit your 1099s, but there are several different ways to go about dealing with your 1099s. So one is you can go into the 1099 details window and you can bring up your vendor. And these are only 1099 vendors that are listed in here. And I know I went through this before where I couldn't find a 1099 vendor, so what I did is I actually ran through the utility. But let's say we actually had a payment to this construction company in April and it didn't get marked as a 1099 vendor. So one of my options is to go into this window and to actually enter the amount. Now, amounts entered have to be done in the month window, not the year window. The year window is a summary of the whole year, but it is not an editable window. So one option in fixing these is to go in and actually key it in. And now if I view it in the year, and I do my save and my refresh, my year totals will generate. Assuming I did it in the right year, 2017. I probably put it in the wrong year. Yeah, I must not have. saved. I think my window is too big for this, and I'm missing my button at the bottom that applies it. Yeah, all right. So I'm missing a button at the bottom on the screen. Let me see if I can somehow get that where that's visible. All right. So we go ahead and we make, and I apologize for making this big, but we go ahead and we add it in here, and we can edit it by each month. The other option is let's say we didn't mark the vendor as a 1099 vendor right from the beginning, and all of their stuff for the year should have been marked as a 1099 vendor. We have a utility down in the utilities that says update 1099 information. And what this allows us to do is not only will it allow us to update the vendor and mark them as a 1099, but it allows us to update all of the 1099 transactions for that vendor. So we can come in here and we can say this vendor is supposed to be a miscellaneous non-employee comp, and I'm going to mark this advanced auto products. So I can do a variety of ranges. I can just do voucher numbers. So let's say for a particular vendor, a particular voucher, let's say we marked them halfway through the year. So their first couple vouchers didn't get marked. We could go in and run it this way and it'll mark them all, or we can go in by a voucher number basis. So this utility is very handy if we didn't get somebody marked from the get-go. Doing it this way allows it to fix the history so that my numbers in the 1099 edit window are not overwritten if I want a reconciliation on the vendor file. So it's nice to go back and get the history if you possibly can. So we're going to go ahead and process that. I'm going to do it to screen here. And you can see basically it took all of these transactions that took place, and now they're 1099 transactions for this vendor. So now if I actually go into that particular vendor and we go to the 1099 edits, now they're going to show up in my list now where they didn't before, because this was restricted by my 1099 vendors. And you can see I now have an amount in here, and this amount is based on history, so it won't get overwritten. So a couple different ways to fix that 1099. If you're just going into the vendor card, the 1099 information is in the options window, and we want their tax ID up in here, and then we want to be down in here, and this is where you'd mark them as a miscellaneous, and then what box is the default box. Now because I marked the 7 box doesn't mean I can't override a payment at payables times. So what happens is I've got a couple options when I enter a transaction for a 1099 vendor. So if I go in here and I pick that advanced, and I go down here, the minute I put in $1,000 in here, it will default the $1,000 over here, and what it does is it defaults to a box that's in the employee record. But I can change this to be something different. So if this was a rent payment, I can mark it as rents. If it's a different tax type, I can mark it that way. The other option that I have is, let's say this is a auto repair shop. Basically, the service that you get charged is reportable. However, if your parts and all those things are listed separately and you can easily ascertain the parts, those are not 1099 reportable. Or let's say you have a private individual doing office repair, and they itemize their services as well as their materials. So let's say only 500 this is reportable. I can actually at the time of entry go in and put in the $500 here, and now only 500 of this becomes 1099 reportable. If I forget to mark this at the time, the unfortunate thing is the utilities will not split up a dollar amount on a voucher. You would have to do that by doing the edit and the override. All right, so let's go in and run a edit list that kind of lists every, oh, there's one other thing, I apologize. There's one other thing I forgot to show you, is where the thresholds are of printing. So most of you print 1099s know that the law right now says that $600 or over. So, but sometimes when you run the edit list and it's set at 600, you won't see anyone on that edit list that's below that threshold. Well, sometimes you want to see them, and you want to see them because maybe some of their payments for the year didn't get processed right. So if you need to adjust those thresholds, those are actually in the setup window, and they're in the payables setup, and they're down here in the 1099 setup, and here is your threshold based on your tax type. So if we want to see all of the taxes for the non-employee comp box 7, which is the biggest one, we're going to put in a penny, and we want to see them no matter what the threshold. Now once you run that edit report, if you know you've got everything right and then you don't want to print those ones below 600, you just come back in here and put your threshold back in. So we're going to go in and say print our 1099s. And a couple of things on here is the year, and we're in the 2017 year. Usually this will default to the correct year. This is the sample company. The other thing is we're missing the payer's federal ID number. So this is the sample company, so it doesn't surprise me that we don't have an ID number in there, just because we probably have to put in something fictitious. But basically this is from the employee setup. So this is just the address file, but if we actually go in, and the company setup is not zoomable from here, but where we would find that is in our admin tab under the setup. We would find company here, and we're going to want to make sure we get that ID number in right there so that that transfers over to our 1099s. Now we can, however, edit in that window, but keep in mind then next year you'd have the same issue. So it's best to go back into the company setup, get it in there so it shows up properly. The other thing is your form type. Continuous is technically the dot matrix. If you're doing the laser, they're technically single feed. They're really going to print out fine for you. However, if you ever modified a report, they are distinctively two different forms within the report writer, so just keep that in mind. The other thing that if you're going to put the tax update in, you should check to make sure you do not have a modified 1099 report from prior years. If you do, you want to remove security and delete it before you bring in your brand new one, because technically you don't want a modified 1099 form if you are bringing in your tax updates every year. If at best, you may just have to do an alignment adjustment. And I will show you that alignment adjustment when we walk through the actual printing. So the first thing we want to do is we don't want to print the form, we want to print the edit list. So we're going to our print icon, we're going to go to our screen, and we're going to say OK. And so basically, you want to see all of your 1099 vendors. Because I did it at 1 penny, I would see all of them that go within the threshold. The sample company's got very little transactions in it, so we just have that one vendor that we marked. The big thing you don't want to see is the blank tax ID. So you need to go in and start tracking down those tax IDs because you're going to need the tax ID in here. So you want to verify all this information. There's a couple of ways to help you verify and track this information down. The edit list is one. The other one is in your smart list. A lot of my clients will go in here under the payables transactions, and they'll actually track down the 1099 amounts, or if they did their calendar close properly, they can go into this view that says 1099 vendors. It actually shows us which 1099 vendors, and then we could actually add a column that shows our 1099 year to date. Now, if you're counting on this, you have to make sure that that calendar close got done on time. And the other thing is also purchases year to date, because what that will allow you to do is that purchase information will allow you to know what 1099 amounts there were and what their purchases were at that point. But here's another way to see your 1099 amounts. All right, so we've run our edit list, we've tracked it down, and now let's say we only want to print 1099s that are over the 600 threshold. So I'm basically going to go back into my setup and rechange that to 600. You don't have to do that. Technically, you can give all of your vendors 1099s, even if they're under the threshold. There's no rule against that. However, some of your vendors might get a little testy if you're giving them a 1099 for under 600, basically, because they didn't plan on reporting it. But there is nothing that says you can't give them all. So once we're comfortable that we have edited all of our 1099 amounts, we've got all of our federal tax IDs for all of our 1099s, and we're ready to actually print it, we're going to go back into the print 1099. So to get caught up in our manual, 43 is actually method 1 for viewing the 1099 details or editing them, which I actually did walk you through. And then method 2 kind of shows you how you can go into the vendor summary window and look at those numbers too. So they're showing you a couple different ways to view the information, as well as I showed you the smart list. So we are actually on page 45, step 7, that says print the 1099 statements. Now what you need to do here is, if you haven't already gone out and gotten your forms, please do so. What I suggest that you do is do an alignment form first and not waste your forms. So what I'll typically do is have a plain sheet of paper, and then if you don't know which way your paper pulls out of your tray, then I would put an X in the top or left-hand corner so that when it prints out and pulls that page, you'll know how to load your 1099 forms in for next time. So what I typically will do is do an alignment form, and I would send it to the printer. And in this case, I'm just going to go to screen right now for a second. So the first thing I do is print the unmodified, whoops, I forgot to say print form. So I will print the unmodified brand new version with no adjustments, and I would take this sheet after it pulls out and I would line it up to my form, and I will see what adjustments I need. Now, I do not want to go in and modify this form. What I want to do is look at my alignment, because things, if you have the current form, things should line up and might just need to have a left or right adjustment or an up or down adjustment. So once you line this up, if you found out that you need to move down, we make a plus vertical adjustment. If you need to move up, we make a negative vertical adjustment. If we need to move left, we make a negative horizontal, and right, we make a positive horizontal, or you might have a combination of the two. So here's how we go about doing that. Once we kind of have an idea which way we need to move, we do the same thing, and this time I'm going to send this to my printer. And what we're going to get with this is a print dialog box. So this is actually my printer here at home, and it's actually telling me I'm offline, so give me a sec so that I can show you this. So here is my print dialog box. So what happens is we get our general tab where we have our printer, and then you can see there's this pre-printed form options up here. And this is where my print dialog box is. Now I know this is in GP 2015, and I believe it's 2013 also, but 2013 might actually bring up your print dialog box. So either way, either you have this tab on here if you're in 2015, or you'll get a print dialog box. So here's our adjustments. You want to do these by tenths. So if I need to move it over, I'm going to do a minus 0.1. So what I'm doing there is I'm making an adjustment by a minus 1/10. So, and this will fill in the zeros, so you don't have to freak out. But I'm doing a minus 0.1, and I could actually put in the zeros so it visually shows better. And then I have my vertical adjustment. So what you do is you go back and forth with this until you get the option that you want. And once you get the option that you want, then what I usually suggest is that you write it down or save it, because odds are it's pretty similar to what last year's was. Now, not everybody will have the same, because different printers have different built-in margins. So that's why we have that minor adjustment to deal with. So once you've done that and you print them and you keep doing that till you get it exactly right, then we go to our 1099 form. We load our paper. We've learned where we have to have our paper. We go up to our print forms and we go to the printer. Now in this version here, it should keep your adjustments until you zero them out. So what I suggest to people is next time you run a report, go back and zero them back out so you don't have that offset. But keep that offset in there while you're printing all your forms. So we go ahead and print our 1099 forms. Then we can load our 1096. Now the 1096 form doesn't have an alignment, so just put in plain paper, print the 1096 form, see if it lines up, see if you need the same offset adjustment that you did for your 1099s. Once you have it lined up, you go ahead and print your 1096 form. So down at the bottom of page 45, they're basically saying if you're in early versions of GP and you had a 1099 that had two different 1099 boxes, you couldn't print them at the same time. You had to use user-defined fields to print one 1099 that was like box 1 and then another 1099 that was box 7. In the current versions of GP, it will allow you to have one 1099 with different amounts in the different boxes. If you are one of the ones that has to deal with it in the earlier versions, it does kind of walk you through the steps on what to do. Otherwise, reach out to our support team and they would be happy to assist you. The other note on the 1099s is top of page 46. If you're wondering where it's pulling the names from, the payees, this shows you where it's pulling it from. So if for some reason you need to have a different name on the 1099, whether it's like doing a business as or something like that, this will help you, assist you with modifying that address field so that it pulls the proper stuff. Currently, GP does not handle the magnetic media filing on the 1099s. There are several third-party products that do a very good job with doing that. We have a lot of customers that are utilizing that. If you are a client that does have to file 1099s, reach out to your client account manager and they'll assist you with your options for doing that. So then it suggests doing a pre-year-end close backup. I do suggest always doing the pre-year-end closes. And then we're going to go ahead and close the year now that we've got our stuff done. Just so you know, the year technically can be closed before the actual printing of the 1099s, and that usually is what happens. Just keep in mind that if you're using those summary year-to-date 1099 amounts in the Smart List that I showed you, that those aren't, you're going to have to look at last year's then, because those would have already been rolled. But most of the time you're actually printing the 1099s out after you've had to close the year. So year-end close, we have the same thing that we had in receivables. We have the fiscal, we have the calendar. The calendar year-end close runs the summary numbers for 1099s. The fiscal does all the rest. And we've got the print report. Once again, I don't suggest that you modify your user date. You actually populate them with the days you actually do the close. And you get a very similar report like we did in receivables that kind of shows those bucketed numbers. Now you can see it actually did populate the last closing date, and you can see that on this day we actually closed it. You cannot reprint the year-end closing report, so if you want it, print it, save it to PDF. You can't get that particular report back. I don't know too many people that actually have used that report, however, but it is not a report that can be regenerated. So then if we go into the vendor, we will see that those summary numbers, actually I'll go to vendor summary here. You can see that those summary numbers for that vendor in the yearly amount since last close views have been rolled. Starting on page 48, halfway down, are the fields within the smart list that are affected by these closes, and as well as we talked about the amount since last close window. Step 10 on page 49 is close the fiscal periods. We walked through that process before. You'd want to go in and close that purchasing series so that you make sure that no other entries get put into that purchasing series that you do not want. If you have not closed your tax year and you want to close it and you did not do it during the sales process, now you would run your closing your tax year. I have already closed my tax year, so I do not want to run that again. So we have some frequently asked questions in there of how things are handled. I'm not going to walk through all of these. I do suggest that you read through them. And that takes us to page 53 about fixed assets. But before I do that, I want to show you the reconciliation routines in receivables and payables, and then I want to open it up for questions, and then we will cover fixed assets and we will cover the general ledger. So the reconciliation routines, we have both a vendor and a payable, and basically they do a lot of the similar stuff. So the one thing about these is they actually do things in separate processes, and there's different type of stuff that you can do. So if we're in the vendor ID and we want to reconcile the summary, so that's that summary window, and we can choose to just reconcile it or just run the report or reconcile it and run the report. Sometimes if you get a vendor in particular that is out of sync, you may choose to come in here and just run it for that individual vendor instead of all. The other option is we can run it on fiscal year. The minute you do that, you clearly have to put in your fiscal year date, and that's going to be in any of your fiscal summary views. Then we have the calendar, and once again, it's in any of your calendar summary views, but notice that the period amounts to reconcile, we can say all amounts, only 1099s, or exclude 1099s. If you are one of those people that have edited those 1099 amounts, if you run this, it will zero them out and recreate them based on details, so please keep that in mind. The batches, sometimes our batch headers get out of sync with our detail. It happens very common when we have a posting issue and we have to run a check links or a recreate. So we may have you come in here and run the batches. Whether you choose to do this type of information monthly, or you choose to do it just yearly, or you choose to do it when we have you do it because something is incorrect. It is a good idea to have a backup in when you run these. And then if you're dealing with workflow, there's a workflow status. So basically to run them, you would just mark which one you want to run. Do I want to see the report first before I actually reconcile it, or we just want to go ahead and reconcile it? I'm going to run this to screen, and there was nothing that it changed. So basically, if it changed somebody's summary number, it would show what it was before, and then it would come over here and show what it was after. And you would just, now that window does close because we ran our one process. Whoops, ran the wrong one. You would have to go back in then, and if you wanted to do another process, you would need to mark it, and you just kind of go down the line on which one you want to run. The receivables has something very similar, and once again, you want to make sure that you get your backup and stuff. This one does something similar. It can do the current customer information, outstanding document amounts, batch information, fiscal year, and calendar year. So depending on whether you want to do the reconcile or just print reports, when you mark some of these, you get a few different options in here, because up here you can see you can have a reconciliation date as of, and basically that's kind of like getting a current aging on a customer. Goes out and looks at all of their customer information and gets their open to date items in sync. It doesn't actually do the aging, but it's very similar to recreating whatever information they have open. Outstanding document amounts, batch, and then when you do your fiscal and your calendar, you can see you're going to have some date restrictions in there. Same thing, you have to run these one at a time. Once you close the window, you will have to reopen it, and you do have different ranges you can run. You can run it just based on certain customers, salespeople, sales territories, classes, things like that. So you do have some options in what you're running it by. All right. I'm going to take a breath for a moment, and we're going to field any questions you might have on payables, receivables, or any of the stuff we covered. Before we get into the fixed assets, I'm going to assume we have at least one customer on the line that utilizes fixed assets. If somebody who uses fixed assets can just ping me and let me know, so out of some weird unlikelihood that we had no one, we'll skip this section, but I'm assuming we probably have at least one. So questions?
Thanks, Pam. I had one question come in way at the beginning of this session. Someone was wondering if you can still process a safe pay.
Well, your safe pay is actually based on posted checks. So as long as, and when you're saying process it, just generating that file as long as they're dated into the prior year. But safe pays usually have to be based on posted checks. So if you're talking about running a safe pay for the new year, it forces you to post the check for the new year, dated for the new year. So those would have an effect on your 1099 summary amounts. If you're generating the file on checks dated into last year, it's not an issue. But if they're checks for the new year, the safe file, the checks actually have to be posted before a safe file can be created. So you would run into that timing issue if they're for the new year. So you can't, yeah, I mean, that's a good question, you know, because before I said you can print your checks and get them out the door, just don't post the check batch. In this case, in order to run safe pay, the check batch has to be posted, so you would have an issue there.
Okay, thank you. And I also heard from at least 5 people that yes, they use fixed assets.
All right, great. I figured there was at least one, but I just wanted to confirm because I would hate to spend the time on it and have everyone bored to death. Any more questions before we move on to fixed assets? All right. So the fixed assets, we deal with it based on when we have processed or added all of our assets. Either we've brought them in from the payables module or we keyed them in, and we have those assets for the whole year. And before we want to bring in fixed assets for the new year, that's when we want to make sure that we do it. Now, it's not date sensitive in the fact that I have to do it on any given day, but I do want to do it before I put in fixed assets for the new year. So some of the changes we have this year is if you do have the luxury auto and you're dealing with that, the maximum depreciation deduction amounts, there are some changes to that. So you would want to make sure you get the year-end update in. So that's going to be important. Other than that, if you have not been forced to put in the year-end update from your other modules, then you would not have to worry about having that update in before you deal with closing your fixed assets. Fixed assets are done at the same time as your general ledger. They're based on your fiscal period, your fiscal year. Now, with that said, technically fixed assets can have their own schedule different from what the general ledger has, but I would probably say in everyone's case who's on the line, unless they're doing a short year or a long year in their fixed assets for tax purposes, their calendar in their fixed assets coincides with their fiscal calendar in their general ledger. So it is recommended that we close all of our books after payables management, but before you close the general ledger, because when you want to send general ledger transactions for depreciation to GL, you want to have it in that year. If you are one of those clients that are running fixed assets kind of in a standalone environment, then you run it based on when you want to do depreciation for the new year. So there is a fixed asset year-end closing report that is part of the closing procedure starting in GP 2015. It is an optional report, but it's printing per book. It shows the asset, description, cost basis, year-to-date amount, accumulated depreciation, and other things in there. So you can choose as you close the year to print this. So that is a new option. So those of you customers that moved to 2015 will be able to utilize that. So let's talk about what happens. When you close the year in the fixed assets, you have to do it for each book that you've set up. General, tax, you have to do it for all of them. And all books must be closed before you can run the depreciation for the new year. So you have to have them all closed. The year-end closing process will take year-to-date maintenance amounts, and it's going to clear them out, and it's going to put them in the last maintenance date. The quantity, if you're dealing with quantities, is copied to the beginning quantity. And so that would be, let's say you have a quantity of 5, and some of them are already depreciated. You only have 4 left, and that might change your quantity. For most people, the quantity stays the same consistently from year to year. The year-to-date depreciation amount is cleared in the asset books, so let's go ahead and start looking at a few of these. We're going to go to our financial here, and if we go into our book, and hopefully I have some assets here. So our year-to-date depreciation here gets zeroed out. That's one of the things that gets zeroed out. Our cost basis here gets moved to our beginning year cost. Our life to date gets copied into the beginning reserve if you're dealing with that type of depreciation. And that is actually in a different screen. Okay, if you're following along, roughly on page 54. So the salvage value gets copied to beginning salvage value, so you know what salvage value you're beginning with for the year. And then the current fiscal year is incremented to the next year. So those are kind of things that take place in these windows. So let's talk about kind of the checklist, and then we're going to walk step by step here. So we want to complete the year-end closing for payables so that we're having all of the assets that we are adding to fixed assets through payables done. Obviously, you want to enter any manual fixed asset transactions. Then you want to depreciate all the assets to the last day of the year, perform the GL posting, print any year-to-date reports, verify your calendar, make a backup, and then do the year-end closing. So let's walk through this. So step 1 on page 54, year-end closing for payables, we've already done that. Enter all the fixed asset transactions for the current year. And then we're going to do step 3, which is make sure you've depreciated all your assets through the last day of the current fiscal year. If you fail to do this and you try to close the year, it will tell you that you have not completed this. So let's go in and run that depreciation. That's going to be in our routines and our depreciate. And I'm going to go ahead and depreciate all my assets. In this case, I think it's my calendar. I have no idea what my calendar close is, but we'll do 2015 for this test, and I'm going to insert all of them and depreciate last day of the year. So let's go to, I do not know what my fiscal year is, but I'm going to assume. So depreciate all assets, continue, we're going to say okay. You can see you now have a progress bar down here. All right. So in the interest of time, I'm not going to necessarily walk through all the screens. Basically, you're going to do your GL posting process just like you do any other month. Print any year-end reports that you want to keep. There are some listing on page 57 of some reports that they suggest that you run. It says if you have more than one fixed asset book, they also have a book-to-book comparison type reports that you want to run. Step 6 is make sure your fixed asset calendar is built correctly. Keep in mind that you probably have generated your fixed asset calendars at the very beginning based on your fiscal periods. You should not have to go into this step unless for some reason you need to recalculate this, but it is in the setup palette underneath the fixed assets. So we go into calendar, and you probably have your calendars projected out to the year 2199 because that was the default. So you just need to make sure your new year is set up in here. And then subsequently you double check your quarters for that year. So those of you who have worked with your fixed assets, it's just a matter of double checking. They should all be set up properly. All right, you make a backup, and then we're going to do our close. Now, the fixed asset year-end closing routine, we're starting that on page 60 if you're following it. It's going to be in our routines palette. Like I said, make sure you've got your backup. I'm trying to scroll down. There we go. All right, so I suggest you could do these one at a time if you want. There's no reason in this case for us to not insert all of them. And we're going to say continue. And we get a report. You can't get this report back, so this is that new report that we talked about in 2015. So this is a great report to run. So there's not a whole lot. It's still a process we have to do. Keep in mind, it rolls all of those fields that we talked about forward at the beginning, and then basically it has to be done before you run a general or a depreciation for the new year. And keep in mind, you want to do it before the general ledger if you're including GL postings for depreciation. So a couple of frequently asked questions. I recommend you read those. Bottom of 60, start of 61. So there are also carries on 62 and 63, have some more. And that takes us to our general ledger. Now I know we went through that fairly quickly, but in the interest of time, I want to make sure we've got some time to cover general ledger before our break. Any questions on fixed assets?
I don't have any at the moment, Pam.
All right, feel free to follow through with them. I will cover all of them after the session. So the general ledger is always a financial closing. And you don't have to close your general ledger until you need to run an accurate balance sheet for the new year. So it can stay open while other years are open. You also can close it and post to the prior year and have it close to retained earnings and the balance rolled forward. So it's a very flexible module. It is always the last module you close, and it always is based on your fiscal period. So let's go ahead and talk about our steps. So step 1 basically is obviously complete the posting and closing procedures for the other modules. The next one is to post the final adjustment entries in the GL. Now with that said, post as many adjustments as you know about at the time. So you don't have to have your final audit. So if you're one of those clients that has an audit or you have other adjustment reviews, you can still close the year and still allow an opportunity to get those final adjustments in because of our ability to post to the prior years. So what I usually tell people is go ahead and keep it open until you need to run that balance sheet for the new year. Because without you closing it, you haven't rolled your balances forward and you can't run a proper balance sheet. But everything is date sensitive and date driven based on your fiscal periods. So it will put it in the proper date, the proper period based on that date. So you can be posting in 2 different financial fiscal years at the same time. Step 3, I do not suggest you skip this. Basically, it is a quick smart list that lets you know that if your posting types of each account are accurate. If they are mislabeled as a balance sheet, they're supposed to be in a profit and loss, you will have an issue when you close at year end, and vice versa. You'll have some accounts that roll the balances forward and don't close out to retained earnings, and you'll have some accounts that should roll the balance forward that close out. So it doesn't take that long to run this, and it could save you a headache later. If for some reason you don't do this and you find out later that something was listed as the wrong posting type, we do have in the back of this section a tips and tricks, or whatever you want to call it, that will actually walk you through how to fix it. But better to catch it ahead of time than worry about fixing it. And it is a very simple, you just go into your smart list and you can go to financial and you can go to accounts, and really what you're doing is just double checking this posting type for all of your accounts. So take the extra step to do that. The next thing is to close out your fiscal period for the year. So if you don't want any more general ledger entries accidentally posted there, you can close the fiscal period. Keep in mind that if you are one of the clients who are still using FRX, period 12, or your last period of the year for financial, has to be open in order to run that FRX. As well as if you're posting historically, that period has to be open. So a couple of things that we talk about is, let's go into our setup options and verify that our general ledger options are right. But first thing you want to check is make sure that your retained earnings account is in here. And if you close the divisional account segments, make sure that every one of your divisions has a proper account segment to close out. Then if you are going to post into history, then you want to make sure posting to history is turned on so that once you close the year, you can post back to it. And then you also want to make sure that you're maintaining history on your accounts and your transactions. You do, I think that was probably a step later. I think I jumped a little, so I apologize. Step 5 is the financial, the check links. We're not going to cover running check links. If you want some help on that, please reach out to our support team. So then the next step is to check the general ledger settings, which I just did. And you want to go ahead and make a backup. Then they have step 8, print a financial detail trial balance. We all know that we can print the trial balances after the close, but then they become historical trial balances. So whether you print it before or after. And then your financial statements, you probably are not going to print these until you do your final adjustments. Make sure you have the new year set up in the fiscal periods. I walked you through earlier setting up a new year if it doesn't exist. And then we are going to close our fiscal year. So let's walk through that routine. Now there's a couple of things that they've improved in some of these newer versions. Prior versions, they did not have a process window, so you couldn't tell when, if you closed it, all of a sudden the window would go away, or you wouldn't see the spyglass and you couldn't tell if it was still processing. So we'd have to kind of go up to the process monitor. But because it didn't do that, people would accidentally close the year twice because they wouldn't think something would happen. The good news is we have a process bar. The other good news is you can see we can actually reverse a historical year. So if we close this accidentally and we do want to reopen it, we can go back and reverse that historical year. So that's a great option in the new version. So it brings in our retained earnings account, and we also got our starting journal entry number. And so if you are one of those clients that resets your journal entry every year and you have a date range, usually don't bring it back to 1, but you might have the year 2015 dash whatever, then this is where it can reset. Otherwise, these just continue to increment. There is a new option here. You can remove unused segment numbers. So if you've got a segment number sitting out there and you no longer have accounts that are utilizing it, it will clear that out. And if you want inactive accounts that have no history, if you want to maintain them, you have to mark to maintain them. Otherwise, they are removed from the active chart of accounts. It does not mean they are removed from historical financial reports. They will still be in there, but you'll no longer see them in the Spyglass. So if you want to maintain them, you need to mark this, and then you have to say, just maintain all of the inactives or maintain just the ones where I have a budget amount in there. Now this is all covered on page 70 all the way through page 71. So there's a little more detail. So we're going to go ahead and we are going to close my year here. And you should be, you're going to get this message, and you'll probably get this all the time. But basically it's saying you have a single-use batch out there that hasn't been posted yet. Do you want to continue closing? Odds are it's a batch for the new year. So odds are you want to go ahead and you're going to say continue. But it's just a double check. Hey, did I post them all? Now the good news is if you didn't, you close your year, then you go ahead and post it, and it'll close it out to retained earnings. So this one's a little generous on the fact that you may or may not get your closings done exactly. So you can see you now have this. This report you can't get back after closing. So make sure you print this if you want it, or save it to PDF, but I cannot regenerate this report for you after the closing. So that's one of the few reports that you can't print after. And basically this one shows you what things have been closed out to retained earnings. So it's the general ledger entry that's created to close all your profit and loss out to retained earnings. Now once again you can see that it incremented my year, and when I ran my last closing, this is one of the ones that actually gives your fiscal closing date, not the actual user date like the other ones do. So do not hit close year again. At this point we just want to close our window, and we have closed that. So the next step is potentially, if you're not running financial statements through FRX, I suggest you go into your fiscal periods and you close out period 12 to the general ledger, and you can always open it up if you actually want to post to that year, because usually what happens, particularly if you're on a calendar year, you've got people that go into January and they inevitably put in 2015, and it will, if those fiscal periods are open, it will post it, it will close it out to retained earnings. So you really want to control your fiscal periods based on when you want people to post to the prior year and when you don't. So make sure you deal with that. So that's step 12, page 72, talking about closing the fiscal periods. We've walked through that. The other thing is step 13 is now the time you might want to adjust your budget figures. If you maintain different years worth of budgets, keep in mind that if you're running advanced financials, or you're running like FRX or Management Reporter, you probably have to go in now, and if you're running financials for last year, you'll have last year's budget in. When you're ready to run financials for the new year, you'll have to remember to go into those column specs and change your budget ID if you have a different budget ID for the new year. Step 14 is create the post-closing backup. I don't feel the need to do that. I know some clients will do it and put it away. I don't know as anyone's ever gone back and actually looked at what their backup their company did right when they closed their fiscal year. But there is a suggestion out there to create those backups. Then we've got some frequently asked questions. One of the things that I pointed out to you is if you have a account listed wrong, page 74 kind of walks you through how to deal with fixing it. If you do, it does require running a couple of SQL queries in SQL. So if you're unfamiliar with that or you need some help, if this happens, you can reach out to our support team. But for anybody who has been paying attention, I'll be highly disappointed if it happens, because we just walked through running that report. So just save yourself some headache. So there are a whole bunch of pages on what happens if you're using unit accounts. There's a good thing on page 79 of how unit accounts are handled during the year-end closing. So if you follow through on the guide, it takes you through all the way through 83. Now I'm not going to read all of those. Actually, it takes you through more than that. It takes you through 84. But you can, once we finish up, if you want to stay on the line and ask a question or want me to review any of that, we'll have a few minutes, but I don't want to keep everyone else delayed past their lunch hour. The next thing pointed out is if you are one of those people that want to set up an adjusting period for all your audit adjustments or any adjustments after your year-end close, page 85's got a good example of how to do it. It's very straightforward. You should be able to follow it. But basically, creating that period does is once you close out your general ledger for the year, and then later you put transactions that are posting into history that way, they will go into a period 13. And that allows you to kind of see what adjustments were made while the year was open versus what entries were made after the year was closed. There's some key points to remember. A lot of it's saying, hey, make sure you got your backups. You know, they suggest performing the year-end close process on your SQL Server just for speed, but if you've got some pretty good network connections and you haven't had any issue with speed, doing it on your workstations should be suffice. And then there's some resources on page 88, so there's some tech knowledges on a lot of the helpful stuff that we talked about. So if you want more detail and you want the tech knowledge right from GP that we refer to. I am not going to cover analytical accounting because we have a very small amount, if any, of our people online that have to deal with that. It is handled as part of the GL close, but so there's not a specific close routine. But I do suggest you read page 89 to just see what tables are dealt with as part of that close. But it is automatic as part of the general ledger close. So that takes the analytical accounting runs through the bottom of page 93. And that takes us, and I know we covered some of the latter stuff, but it kind of builds upon some of our earlier discussions. So we usually cover that fairly quickly. So right now, for those of you that don't have any questions, are going to duck out. Thank you for joining us today. And if you are a payroll client, we will reconvene at 1 for that payroll session. Otherwise, I will hang on the line here and answer any questions that anybody has on any of the modules that we covered.
Pam, I do have a couple questions. Can we still close the books and leave the tax open until tax info is confirmed?
And I'm assuming you mean like the sales tax or use tax, and or are we talking about the fixed assets? So whoever asked that question, just give me a clarification on whether it's the sales use tax or fixed assets.
It was in regards to fixed assets.
Or general ledger. So,
Pam, it was in regards to the fixed assets.
The fixed assets. Yes, as long as you don't have to, if you have to hold off on that, what you probably want to do is hold off on putting any new fixed assets in. So if you're running your tax report, you can get away with not closing those tax books, but just keep in mind that you cannot run depreciation for your new period for any of the other books until tax is closed. So you can do the other two, hold off on tax, but you can't do depreciation for the new, for like, so let's say you close your book and you close your general. You cannot run depreciation on either two of those assets for the new year until tax is closed. But yes, it can be done at a later date.
The next one I have, and this was asked before you went over any of the budget stuff, so I'm not sure if you want to talk about this just a little bit more, but how does the maintain history for budget transactions work? Will this allow
Yeah,
me to report on historical budget data?
yes, yes. So that is a good question. If you are one of those people that uses the new feature of budget transactions here, then yes, if you do not, that budgeting history stays in there. You can run reports based on the year. Basically, it just becomes in the other year. So this does not go away if you do budget transactions. So you are able to report on those.
Thank you. You ready for the next one?
Sure.
Is there a different process if we added a 13th period in April? We needed to split April for financial reporting purposes.
Um, and no, and I don't know if April is your year end or not, but we refer to 12 periods in here just because that's kind of like the standard. But it doesn't matter how many fiscal periods you have, the process is not the same. So if you had to do April and split it, the process is based on your fiscal calendar, and your close takes place when you've finished the last period in your fiscal period, and everything is date driven off of that. So if we look at your setup of your fiscal periods, and we just kind of go back into that window real quick, everything is driven off this calendar, but this calendar could have 365 periods. It could have as many. So just because you had to have one of your periods have less days in it than the rest of the periods, or you had to close your year based on a different date, it's going to put it in the year based on the date you key it and how it falls within these fiscal periods. So the process we went through in here does not change.
Thanks, Pam. One more question on maintaining budget history. If you select the maintain budget history box, will that maintain history for the year which is being closed only, or will it maintain it for all prior years available too?
Right, right. So, so the question on there is, and let's just kind of review that. So if we actually go to our setup of our general ledger, and we've got this button right here that's not marked. So basically these are toggles. So it looks at these when it closes. Otherwise it doesn't look at these options. Okay? So it goes out there, and when I'm closing it, so let's say these were all marked and I closed 3 or 4 years. Well, each year it looks at this and it will maintain the history for that year we're closing based on these options. If I all of a sudden turn this off for a year, it doesn't get rid of those old ones. They stay out there because we chose to maintain the history. But what it won't do is, if I'm closing this current year, it's going to get rid of the budget transactions for the year I'm closing because I chose to not maintain those. Because basically what it does is it takes all of these and takes them out of an open table and puts them in a history table. So if I don't have these marked, it does not put them in that history table, but it will still maintain history from prior years based on how you designated this. So hopefully that answers the question.
So if I want all the prior years of budget to be budget history, I would just put a check mark in there and make sure that that box is always check marked?
Yes, that is correct. So, but it looks at the option when it closes the year whether that year is maintained in history or not.
Okay.
But it doesn't go back and change any selections you made for other years. If you chose to maintain history or not, it's not looking. It's just, how am I going to deal with this year's? Do I copy them from the open and put them in the history, or do I just delete them from open? And that's just so everyone knows, that's the transactional detail. It doesn't change your financial printing and things like that. It's just whether you can drill down on the historical information.
Thanks,
The
Pam.
balance, yeah, the balances in the accounts will stay. So, okay.
I think that's it. We're ready for a break.
All right, great. Well, feel free to follow through. If you want to stay on the add questions while we're on break, that's fine. And if you're staying with us at 1 o'clock, we'll answer them. Otherwise, if you include an email, Jen will get that information to me and we will follow up. Otherwise, feel free to reach out to our support team. They're very busy this time of year, but they will get to you and get you whatever answers. So thank you very much. I will reconvene with everybody at 1 o'clock. Good afternoon. I'm Pam with Crestwood, and for those of you who weren't in my morning session, we will, I think the majority of the people were, but basically what I'm going to do is cover the content in our year-end manual. So there is a link out there to the handout. So if you have not clicked on that and downloaded the PDF file or have it printed out in front of you, it would be beneficial to do that now, because I'll kind of refer to where we're at in spots of the manual so that you can take notes and kind of reference it later when you're working on your year-end closing procedures. If you have any questions that come up as we're covering the topics, feel free to submit something in the questions there, and we'll kind of take some mini breaks throughout the time and just check and see if there's any questions and make sure that we get all your questions answered so that you have a comfort level going into your year-end payroll close. So we are on page 94 of the year-end guide, and that starts our payroll year-end procedures. So the big thing there is you need to be on GP 2015 or GP 2013, so 13 and 15, in order to get the year-end tax update, and there are some changes that you will need. So if you are a payroll client and you are not on one of those versions, you need to reach out to your CAM or our support team right away and get some conversations going on how you're going to handle your year-end procedure. If you require assistance with applying the year-end tax update, which is actually a service pack, then if you have not already set up a appointment with our support team, please reach out to them as soon as possible so they can get it on the schedule so that we can get that service pack applied in a timely fashion for you in order for you to process your year-end payroll. The year-end payroll is out. It is available. I have it loaded on my GP 2015, which you should see in front of you. Please let us know if you don't see the screen properly. But the updates that are taking place this year is there's some W-2 electronic filing changes. There are updates for the Affordable Care Act reporting. It allows you to print the W-2s online if you're in GP 2015 R2 through the employee self-service. There are some payables forms and application changes, which we talked about in the session this morning, and there's also a depreciation change, which we talked about in the session. So the one thing to be aware of, or the way to double check that you have this information applied, is if you look at page 94, there are links in this manual, and if you're on the PDF version, it should be a clickable link to the downloads for this year-end update, whether you're on 2013 or 2015. But the one thing to note after you do it is there is a way that you can go in and kind of look at when your last year-end update was, as well as it'll let you look at your current version. So one of the things that we want to look at for the year-end tax update is we can either navigate through our menu option up here, and I think this time I'll navigate up through here. I used my navigation pane last time, but we're going to go up here and we're going to go into Tools, Setup, we're going to go System, and then we're going to go down to Payroll Tax. And a couple things you can look at. So there's one screen that we're going to take a look at, and then I'm going to just kind of bring up all the screens and then we'll kind of look. And then there's a payroll screen in Setup that's going to kind of tell us what's going on. So if we look at these two, we've got some information that kind of tells us where we're at. The payroll tax setup lets me know the last time I had a tax update. Now, I did one on 8/27. You might have one earlier in the year, but that doesn't mean you don't have the current tax updates for the states that you live and work in. Part of the issue with these is there are different dates where there's certain states that have changes that don't affect your states, and then you're not necessarily required to do that tax update. Now, if you're not current with this and you feel like you want to get the most current one out there, do not do your automatic tax update at this point. We're going to want to do a manual update, and I'll walk you through, well, actually I can walk you through the tax updates right now. And the reason being is because the 2016 tax tables are out there, and if you do that, it will bring in those instead of the last of the 2015. So if you're going to go in and get those updated because you're unsure that you have the most current, when we go into this process, we do not want to do the automatic like you normally do. We would want to do the manual, which means you're going to want to have that tax update downloaded, then come into manual and install it. Now, one of the things that I'm going to do real quick is I'm going to go out to the tax update window, and we're just going to kind of take a look at where those tax updates are. Now, this will look a little bit different than your customer source, only because I'm on partner source. But the biggest thing you're looking for underneath the support is, and just follow the link that is in the manual. But I'm going to go in here. And I'm going to bring up my link here. If I could type, that would be half the battle. So I'm just for the, basically it's partner source here. Let's see how well I did in typing that in. I did not do too well. All right, let's go into our, we'll do it the navigation way, but follow the, follow it on your guide, not through here. But so here's our tax update for 2015. So on this page, you can kind of see that round 1 is targeted for release of 12/21. So let's go see what's currently out there. So in this case, because round 1 is not out yet, if you go out there before the 21st, it looks like you can do your automatic. But I always suggest that you be really, really careful, because once this 2016 becomes available, that is what will apply. So let's look at the thing here and see how that compares to what I have loaded. So you can see I actually have the most current at 8/27. But if I'm a customer who's not Connecticut, doesn't have Ohio, Idaho, no North Dakota, no New York, then really I probably have a date of 1/18/2015. Because I would even know if I applied these, I would be fine. If I don't have these states, the 1/18/2015 is the most current I would have to have. And that's the date right here in that last tax update. So I actually have the most current one at 8/27. And you can see the code last was updated 1/18, which if I look at my last tax code update right here, I'm right on track with those also. So you probably have a 1/18 and a 1/18 in both of those. If that's the case and you don't have New York, North Dakota, Ohio, Idaho, or Connecticut, then you are good to go and you don't have to worry about getting current with a tax update. The next thing is my payroll year end on here, and this should be something of last year. And it, actually, I have loaded this in this version, the year end update, but prior to loading, you should have a date sometime last year. Once this is loaded, you should have a 11/13/2015 date. This is in your manual on page 24. It kind of talks about going in and taking a look at these. And then the other thing we want to look at is we want to go to our Help About Microsoft Dynamics icon. And what that's doing is that's also a way for me to know that I have the version. Now, if you look on the bottom of page 94, for version 14, which is 2015, it's got 14.00.0817. Now, you can see my version is slightly higher. So as long as it's higher than that 817, you have the year-end payroll update. There also is a version number listed for 2013. You want to be at that version or above that version. All right, so once again, if you feel like you need a more current tax update, what you would do on the website is you would come down, if I scroll a little further down on this website, right here, this tx.cab, that is what I want to download in order to manually install if I try to do this after the 2016 tax tables are out there. So don't just do the automatic blindly at this time of year. You can do it during the year to stay up to date, but you have to be careful this time of year. All right. Most of that stuff I just covered is page 94, page 95 in the manual. So just kind of double check where you're at and make sure you can, if you're working with our support team, they will get your update downloaded for you. So page 96 kind of talks about other preparation tasks for the year end. So the one thing is to just kind of double check and make sure you have your W-2 boxes marked properly. So if we go into cards and we go into the payroll, we go to the tax here. For a particular employee here, if they have, if you need that retirement plan eligibility W-2 box marked, you're going to want to come in here and verify that you have all those employees who should have the retirement plan marked on their W-2s. You want to come in here and get that marked. Another thing is to make sure that if this is your first year doing payroll, to make sure you have all of the tax IDs set up so that they print properly on the W-2 for all of the states. And like I said, I'm walking through these screens, but please note in the manual it does walk you through the navigation of all of these, so you don't have to write down the navigation. So in the tax IDs, you would want to bring up all of your relevant states that you are dealing with, including federal, and you want to make sure that those IDs are in there. So I actually reside in the state of Wisconsin, so I'm going to bring that up. So I want to make sure that tax ID number exists for all of the states that I will be reporting on. You want to verify that all your deductions and benefits have their proper boxes marked. So we can go in. I would suggest doing that at the setup level and rolling it down to employees. So what we'd want to do in there is if we go into the deductions, you'll also have to check your benefits. But if we bring up a deduction, this happens to be your 401k, we want to go down to the bottom of the screen and we want to make sure we have the proper W-2 box and the proper label marked. If it's incorrect, we can mark it and then we can roll those changes down to all the employees that are assigned that deduction code. If you have non-cash taxable benefits, such as automobile expenses, life insurance benefits, moving expenses, etc., you want to try to get them on the last payroll of the year if at all possible. Otherwise, you'll have to be making some manual transactions there. And then the thing that's at the bottom of 96 basically talks about getting the latest payroll tax update on there. We just talked about how to decide if you need it or don't need it. Page 97 kind of talks about testing W-2s before closing the year. Basically, what it's saying is at any time during the year, you can close the year and generate a year-end wage file and still run reports and look at it, but still run payrolls for the same year, but you have to remove the year-end wage file. So let's say you were trying to check the taxability of something to make sure it's correct, or let's say you have an employee that has passed away and the estate asks for a W-2. You can also run this, check it at the end of the year, remove it, make edits, and recalculate. So the way we go about doing that is in our routines for payroll, and I'm going to bring that up so that's visible. If we go into our year-end closing, the year we have up, and this is the sample company, it's 2017, so we're going to go ahead and click process. So I now have created the year-end wage report, and the year-end wage report is the same thing as if I go into the edit W-2, but I'll just show you what the report looks like. The report is kind of a snapshot of what's going to print on the W-2. This can get quite a lengthy report. It basically does a page per employee, but it really is kind of visual view of what the W-2 is going to look like in a report format. So a lot of times you could just print this off for one employee. It doesn't have to be on a W-2 and the estates are fine with it. The other thing is we have our edit W-2 window here if we just want to bop in and see how it's looking, see kind of things that are missing. So this can happen at any point in time. However, we cannot run a payroll for in this same year, 2017, which I closed, without removing this year-end wage file. So if I still have a payroll to process, what I do to remove it is I go up into my year-end closing, I have my same year in there, I hit my process, and basically it's telling me that wages already exist for this year, and do I want to go ahead and remove that year-end wage information. So in that case, I'm going to go ahead and I'm going to go about doing this, and I'm going to say delete. And now it's just saying, okay, they've been deleted, do you want to recreate them? Now you would do this in a case where you generated your file, you found errors, you want to remove it, you made your changes, and now you want to regenerate it so it's reflective of your master record changes. In this case, I don't want to recreate it because I'm assuming at this point I'm creating more payroll for the year. So I'm just going to hit cancel. So my 2017 records no longer exist. The other way you can do this is actually in the utilities palette, which is what the manual shows you. And so if you're in utility, there's a remove year-end information in there. And basically, I've already got rid of my file, but basically I could select my file, insert it, process it, and remove it. It does the same thing versus the method that I just walked you through. So that's how we can regenerate and delete the year-end wage file as many times as we want. Now the caveat to all of that is we can create our year-end wage file, see that we need to fix W-2s, remove it, go in and do manual adjustments, whether it's manual transactions, whether it's master records, and regenerate that year-end wage file. We can do that as many times as we want until we load the 2016 tax tables. You do not want to generate a year-end wage file with the new year's tax tables applied. So if we find things that we have to edit after that, we would have to edit the W-2s. We can no longer have the ability to fix master records and regenerate the file. All right, so let's talk about our year-end checklist. I am on page 98. Now, one of the things here is it's pretty rare that we can actually go through all of this and print all of our W-2s before we have to move on into the new year. It usually just doesn't happen. So we're going to kind of walk through our steps, assuming, and this checklist assuming perfect world, you verify and print all your W-2s before you move on to the new year. Typically that happens after. The big key is you have to have the year-end wage file generated before you load the new tax tables for the new year. You don't have to have the W-2s printed, but the file has to exist. So let's walk through our detail stuff. So we're on page 99. So the first thing is to verify the versions of the GP. We've walked through where you can verify that. Make sure that, one, you're either in GP 2013 or GP 2015 in order to get the new tax update. So the big thing there. The second thing is to verify whether you need to install the year-end update. Now, if you haven't installed it already, you do need it. So if you're on 13 or 15, you're going to need the year-end tax update. If you're on any version other than that, there is no year-end tax update available. So step 2 on page 99 is to complete all the pay runs for the current year. So you don't want to do any 2016 ones yet. You don't have the new tax tables in, but you want to get all of your 2015s done. In here it tells us when we're going to load the year-end tax update. Keep in mind that that year-end tax update can be installed anytime now. It won't affect your current payrolls. So if you some of you already have it, some of you might have it scheduled, but even though it's listed in here in a certain step, that year-end tax update can be installed at any time between now and you generating your year-end wage file. You want it in place before you generate your year-end wage file. Step 3 is complete all your payroll month and quarterly end procedures. So you're going to run any monthly, quarterly reports. That really can get done, you know, it doesn't have to get done right here. That can get done a little bit later, but it's kind of the logical flow. Complete your pay runs, run your reports. Then step 4 is to make a backup, and this is going to kind of be the pre-year-end wage file backup. To me, it's kind of like the pre-year-end update backup, and if we are helping you with your year-end tax update, we will have a backup in place before we apply that update. So as part of the process of applying the update, backups are always taken. So don't skip that backup before you install the year-end update. We're on the top of page 100, and it's got us installing the year-end tax update. And like I said, that can get done at any time between now and the generation of that year-end wage file. So they've got it in step 5 because step 6 in this checklist is to create our year-end wage file. So let's go out there and regenerate that year-end wage file. I'm working in the year 2017. Obviously, you would be working in the year 2015. So I had removed my closing previously, so I have to regenerate it. And the processing is just as simple as that. You don't see anything after. If you're not clear that your process is done, go up to Microsoft Dynamics GP and check that process monitor and make sure there's nothing hung out there. You can also tell by going into running your year-end wage report, which we have already run, or into your edit W-2s, you can tell if your file's been generated. Okay, so there is a suggestion to make a backup after the year-end wage file. You're probably getting nightly backups anyway, so unless you absolutely want to keep that backup historically, this is one of the spots where to me that backup might be optional. You know, in the days when we couldn't keep history on payroll, it was pretty critical because we would want that backup in, and we used to have to remove all of the payroll history to go on to a new year. That is not the case in the current versions of GP. So we don't have to remove our history in order to move on to the new year. Now what you're going to do in here is you're going to verify your W-2s and your 1099-R statements, and I'm not going to cover the 1099-Rs. I have yet come across a company that actually has to print them, but you know, they are in here as an explanation on printing them. If you have any questions or concerns about how to print them, you can reach out to our support team. So a couple of things you notice down here, there's a new 1095-C tab, and there's also a dependents. That has to do with the ACA type information, which we will cover. But some of the typical things you're going to do to edit is the retirement plan marked for this employee? If you go into the individual boxes, in this case he didn't have any box 12 information. Here you can see the 401k is listed here. We have state tabs. So all of this information, now I don't suggest that you review this by window unless you've got somebody who's just kind of clicking through. I would suggest to review it off the year-end wage report, but needless to say, it's the same information no matter whether you view it in here or not. I do not believe in this case the 1095-C information is set up. This is where we would edit. We will talk about the ACA at the end and where it's reporting, where it's coming from, and how you can get the information. And the dependents go along with the ACA information. So if you have not applied the year-end tax update, you may not see these boxes at all in your current version yet. All right, so that was kind of explained on 101. So let's assume now, and the next step basically says to print your W-2s. So the step 9 will take place whenever you're ready. You may have to put your new tax update in and do another payroll before you come back and print your W-2s. So even though it's now listed, if you're not able and you have a whole lot of reconciling and double checking to do, but you need to run a payroll in 2016, then basically you would be going to loading your new tax tables and running your new payroll. Now with the caveat, as soon as you run those tax tables, no matter how many errors you have in here, you cannot remove the year-end wage file and regenerate it because you'll pick up 2016 tax updates. You would have to manually go in and edit any changes. So you can still get proper W-2s, it would just be a manual edit process. So let's assume right here, just to walk through, is I'm going to show you how to print the W-2s. This is assuming you're ready. You do this step when you're ready. So a couple different things. The first thing is there's what's called a validation report, and that's kind of the option that defaults down here. So what it's doing is it's kind of going out and looking to see if Social Security withholdings tie out to what it calculates. It's trying to look at if the employees have a valid Social Security number. Now I'm going to print this for the sample company, and it'll basically tell me everybody's Social Security number is incorrect just because we don't have true Social Security numbers in there. But you basically want this report to come out clean. If the Social Security Medicare comes out and the adjustment is more than a penny, you might want to think about editing it And those things usually don't happen except for maybe companies that come online with GP mid-year and they're bringing in their historical and they didn't properly tie out their historical stuff. So basically the system takes FICA and Medicare taxable wages, calculates what the withholding should be, and compares it to the actual withholding and shows discrepancies. So I'm going to go ahead and print my validation report here. Just so you can see it. Now you can see invalid Social Security numbers, which I talked about. But you either want to see this blank, or if you're uncertain how to address something that comes up here, you can reach out to our support team. But hopefully if you had invalid Social Security numbers, your employees have told you that prior. If you do see validation errors, you do have to remove the year-end wage information before making changes, or you have to make the changes directly in the Edit W-2 area. The published employee self-service, basically what that's doing is if you do have the employee self-service, what you're saying is you can dictate now when the employees see their W-2 information. So you can still print it and have all these things ready, but leave this unmarked, and you can come back in and decide when you're going to make those available for the employees to see. If you have employer-provided self-insured coverage, you do want to mark that box there. What it's going to require you to do then is you have to you're going to have to provide the benefit information for the ACA. So that's how they know whether you are required to report the benefit information. We'll talk about that in the ACA. You obviously want to make sure your employer ID number is down here. So this is also assuming that at this point you have gone out and you have gotten your W-2 forms and you have several options that GP will print out of the box. We have a one-wide continuous, a two-wide continuous, the one-wide single feed, which is probably what a lot of you have, or a lot of you might use the 4-up laser form. So these bottom two are the common ones. The continuous one, I don't think we have people using dot matrix nowadays, but once you select those, now what you want to do is you want to make sure you don't have any modified W-2 form from a prior year in there. Because if you do, then you're not getting the changes to the forms that take place from year to year. Now, the good news is the W-2 form didn't change this year, but it's good habit to get rid of the old version before you bring in the new version. And one way to tell that is go up into your Microsoft Dynamics GP. If we go down to Tools and Customize and Customization Maintenance, if we had a modified W-2, it actually would be listed here as the W-2 form. You would want to go into Security, remove Security to it, and delete it. That way you are using the most current W-2 form that is out there with the tax update. If for some reason you have any questions on how to do that, remove security and things like that, you can reach out to our support team. They will assist you. So assuming you've got the brand new version, we're going to go ahead and we're going to do the one-wide single feed. And then I do like doing a W-2 form alignment. And what we do there is I usually take plain paper, and I will, if I'm unclear of how a form goes through my trays, and when I'm saying that, I'm meaning whether it flips it upside down, turns it backwards, things like that, I will put a X in the upper left-hand corner of that blank paper. And then when it goes through the alignment, I can kind of tell how I need to load my W-2 forms. But for the first thing, I'm going to do an alignment on my plain paper. And I will go ahead and print it. In this case, I'm going to print it to screen, but right now I'm going to send it to my printer. So I will take this piece of paper, I will hold it up and align it with my forms, and I'll try to see how my alignment is. Now, if I need to make adjustments, I don't want to go in and modify this form. What I want to do is to make printer alignment adjustments to my form using the printer functionality. So Let's say I hold that all up and I realize I need to move it down and to the right in order to line up to my boxes correctly. So I'm going to make an alignment adjustment. If you're following along with me, this stuff is all kind of covered on 103, a little bit on 104, and I'm adding just a kind of maybe some little tidbits. I do know at the end of the payroll section they talk about the alignment that I'm talking to you about right now. So I'm trying to follow the manual as much as I can. So what we'll do on there is we've got our W-2 I want to print now. Now the exclude ESS printed W-2s, if you don't have employee self-service, you don't have to worry about this. If you do, basically you're saying we're not going to print any of them if the employee's gone out there and printed them already. So what I'm going to do is I'm going to bring it up to the printer so that you can see, and if you're in the versions where you can select the printer at runtime, you're going to see this little extra tab over here once you select the printer that says pre-printed form options. If you're in the older versions where you don't see this, when you hit print, the printer dialog box will come up, and that's where you make your adjustments. Now this horizontal adjustment that I have in there was earlier from my 1099s, because once you put these in, these adjustments will stay until you zero them out. So once you're done printing your W-2s, I suggest you write down your alignment when you get it, because you got to do this print job several times over, and I would suggest keeping it right in with your year-end payroll folder or whatever you're going to keep. So it should stay consistent year to year if your printer doesn't change. So if I want to move it up, I want to do a minus adjustment on the vertical. If I want to move it down, it just becomes a positive. And subsequently, if I want to move it to the left, it's a minus on the horizontal, or to the right, a positive number. Now you want to do these in small increments. Don't put in 1 inch or whatever. I typically suggest you do 0.1, 0.2, or 0.25 type adjustments. So what you want to do is put these numbers in and play with them until you get a number that has your form lined up the way you want to see it. These adjustments will stay in until you zero them back out. So next time you print a regular form, you might want to zero these out. I am not going to print this to my printer, but so I am going to print my alignment as many times until I get it perfect. And then when I know I got it perfect, I'm going to go to my W-2 form, I'm going to load my first form, and then I'm going to come up here and do my print and print my W-2s. Then I'm going to do that as many times as W-2 forms that I'm printing. If you're one of the people that's doing the 4-up, then you probably have one form plus you might keep an internal copy. But you run this job as many times as you need copies, whether you're doing one for internal use or however many you're giving to the employees. Once you have them all printed, then you can print your W-3 transmittal. And once again, I suggest this first W-3 transmittal form. There is no alignment form, but I suggest that you print it to plain paper, get your alignment, and then put your W-3 form in. Now the 1095C and the 1094C transmittal will cover in the ACA stuff, which we're going to do after our normal processes. So that pretty much just takes us through the printing of that, whether you do it at the step we're at now or whether you do that after you've moved into working in the new year. The printing does not change. What changes is whether you can make your edits via the employee master records and manual transactions and regenerate the wage file, or whether you're past the point where you can regenerate the wage file, in which case you have to do your edits in your W-2s and W-3 file. If by any reason you do edits in the edit W-2 or the edit W-2 in there, and you regenerate the year-end wage file, you will lose all your edits that you did directly in the W-2 window. So keep in mind when you can edit them and when you cannot edit them. All right. Before we move on to the rest of the payroll process, this is a good breaking part to see if anybody has any questions about printing the W-2s, creating the year-end wage file, when you can put in the updates, when you can't, any of that timing, not respective to the ACA, because I will cover that. So are we getting any questions, Jen, that you can see?
No, not yet. And your audio cut out for just 30 seconds there, so let's give people a chance to type in questions if they have any.
Okay. So right now we're taking any questions on the current process that we've done without respect to the ACA.
How do we produce a W-2 CBS file? I'm thinking CSV file.
And I don't know, we have not covered doing the year-end transmittal file yet. We will walk through creating that file, so I don't know if that's what you mean. Otherwise, it's within here, there's probably not a pretty way to create that, but because that is in the year-end wage file, an Excel-based report or a smart list, if you have smart list builder, could be created. So I guess I would want to know a little more detail about how you want to create that CSV file. I do know that I've got clients that use third-party people for their
That's what
W-2.
they do. They use a third party to print W-2s.
Right. So what I suggest there for them is, and I've done it for another client, is we've created an Excel-based report that pulls the data out of that year-end wage table. So the year-end wage table is a specific table, and we will just link to that in Excel, and then you can save that as a CSV file.
If they want to do that, should they just contact our support staff? Is that something they can help with?
Yeah, that's probably the easiest because this year-end wage report is not designed to do that. However, this basically is all contained in one table, so they can create a SQL table view, or the easiest way, like you said, is you create the view and you link it to the Excel-based report. That's something that our support team could assist with.
Thanks, Pam.
All right, we good on questions?
No, I don't see any other ones at the moment.
Okay. So the next thing would be step 10 if we're going in order. If you have human resources, you can inactivate the human resource information. All that is doing is archiving the HR-related stuff related to an employee if they haven't been there for a while, so it's not in your active file. It does not completely remove them. It just puts them in an archive state, so they're not in the current information, but you can always retrieve that client back from an archived state. So it's a real simple process, and there's an instruction on there on how to run that. The other thing is if you're using the attendance module in human resources, then you need to make sure that your attendance period schedules for the new year exist. Now, I wasn't going to show those two processes directly on the screen because they probably don't pertain to the majority of our people, but if you are one of those clients that wants to see that step 10 and that step 11 on the screen, just reach out on the questions and we'll add that in. Otherwise, in the interest of time, I'll show more of the steps that the majority of the people need, but I can walk you through that if the instructions that you're looking at are unclear. The next thing would be is before we start the new year is we have to have the fiscal period set up. We did cover that in the earlier sessions, but if we have anybody who wasn't in those earlier sessions, what you do want to make sure is that you have a fiscal period for that new payroll year set up in here. So if not, you need to go ahead and add that. And then one of the step 13 is optional. Go ahead and close that fiscal period for the payroll series. I'm always a big fan of doing these soft closes so that people don't accidentally make an error, because GP is very much driven based on the dates. So if a date exists and the period's open, it's going to let you key into those periods even if your company has moved on to the next period. So I'm always a big fan of doing those soft closes. You can always come in here and open them back up, post a transaction, and then close them back. So then step 14 before we process for the new year is to install the 2016 payroll tax tables. So this potentially could take place before you actually print your W-2s. But once you do that, just know that you don't want to regenerate the year-end wage file for making edits. So in order to do that, it looks like it'll be out there as of the 21st of December. So that is just a matter of doing like your normal tax updates. And that's going to be going out to Microsoft Dynamics GP and going out to maintenance and then going out to US payroll tax updates. Now you only have to do this on one workstation, and it does not matter which workstation. We're going to go ahead and click this. We're going to leave our automatic in. We're going to say next, and then you need to put your authorization number in. Once you have done that, it will go out there and update and bring your current tax update in. Now, how we know if our new update is we can go in and double check what that update is. So if I put in a number here, and basically it says I've already applied this tax update to your file. So that tells me that the 2016 aren't out there yet, because we already looked at what my latest tax update was. And basically where that is, just as a refresher, but I could have went out on the website and checked too. So this is my tax update. So it's saying I already got this applied. So that's the last one that's out there. And we also could tell that when we went out to the website and we saw right here that that's the last one out there. And you can see up here that we don't have release 1 of 2016 out there yet. Alrighty, where am I? All right, let's get some of these windows closed. All right. So that's applying the new tax update. Then you're going to want to go into where I just showed you and check and see that it applied them. So once you've done that, you're okay. Step 15 is to process the payroll runs for the year. And then if some reason you're one of those people that weren't able to do the W-2s, then it shows you step 16 where you can go back in and print your W-2s. And we already walked through the printing the W-2s and the W-3s. It's just a matter of when your timing is on those. So once we've finalized all that and printed the W-2s, if you are one of the customers that actually have the electronic W-2 file processing, and you file through here, now keep in mind you have to have registered with Social Security Administration. You can't just decide, oh, I'm going to start doing W-2 electronic filing. And it basically tells you, hey, you have to already been registered for this. So, you know, make sure you've got all your information in there. So we're going to say okay. So what's going to happen in here is we're going to mark the company that we want included. Now I have an error in here, so there's something that it doesn't like. I'm missing some required information. Only I'm not sure I see what my required. I don't think, we'll just fill that in and see if that's its issue. You can see I have an icon here, so basically it's telling me it's missing some information. I suspect it's the employer EIN because this is not a valid one, it's a fake one. So you should not see that question mark. If you see this, then you know you're missing some of your information. Now you got to have your user ID number that's provided by the Social Security Administration in order to do the electronic filing. And then you're going to want to make sure that everything's filled out on your submitter tab here. Now if you've done this in prior years, this information should all be filled out. Should not be an issue. And then once you have all that information filled in, you're going to go up and you're going to, here's the default. I don't suggest you necessarily change this. You can always move it later. But basically this is the report that's generated in the location that will get sent electronically. So we went and created the file, and if we can go to screen, it will bring up the screen. And this is a filing summary report, and it's basically for your records. And then our file actually will exist out on our C drive, and we'll go ahead and open that with Notepad. It's up. I'm just think it's went on my other screen, so hold on. There we go. So then there's our file. Now you do not want to get in the habit of editing this. We've edited it and fixed this file in rare occasions for customers. It can get pretty ugly and it needs to be exact. So if you ever have to edit this for some reason, I do suggest that you reach out and get our assistance, because one little change here can change totals down at the bottom. But this is the file that gets sent to them. Basically, there's some information on all of the stuff I just covered is actually laid out on page 109 through 110. And then there is the payroll year-end closing frequently asked questions that you can read through starting on 110 and 111. Bottom of 111 is that vertical horizontal printing adjustment that I talked about, so if you need to review that. And this runs all the way through the end of the guide, with the exception of the ACA information. And it's not in the guide, just so you know, because the ACA information has been very fluid. Things have been changing rapidly, and we've had to put this guide together a while back. But we do have information on our website that I want to point out, and then I'll cover with you all the information that I'm aware of what needs to be set up in GP. So before we cover the ACA, aside from the ACA reporting, any questions, comments, concerns, things you want me to go over more slowly involved with that payroll closing that I just went through?
Pam, you must be the best webinar trainer in the world. I have no questions in here yet.
Either that or they're all sleeping. I'm just not, I'm not sure. It's one or the other. So
we're going to go with my thought on that one.
We will still, I'll still be available for questions after we cover the ACA. So let's go on to the ACA, which is kind of the big thing that has come about as far as payroll is concerned. Otherwise, our process is pretty similar from all of the other prior years. So if you had put the earlier update earlier in March that GP put out, you were on a version that had it, and you went in and you marked your relevant information, it's possible that some of your ACA information has been being tracked since then. you still probably will have to edit some information. If you are just putting on this update and it's the first time you've put on any of the ACA stuff, unfortunately, you are going to have to manually edit all of your ACA information to get it on the W-2s properly. So I do suggest that you get this update on as soon as you can and you start working with what information needs to be put in there. So first of all, let me show you where some resources are out on our website, and then we'll kind of walk through the process. So we actually have a link, and I'm going to bring it up, and it's actually, if you go to our main website, you can probably find it, but if you can see this website that's at the top of my screen, and I'll leave this up so that people can write this down. This is direct information about the Affordable Care Act compliance. Now, it is linkable through our year-end blog. So there is a other link, and I think that information got sent out to everybody. But this here basically kind of shows you the forms and what's mandatory, what's optional, who needs to do it, the fact that how is the ACA tracking going to take place in GP. And then basically they're saying, and if you're kind of preparing for it, you want to install the year-end update. And the big thing is human resources has to be installed. So if you're not a client that doesn't currently have human resources installed, it needs to be installed in order for you to utilize these fields and track the ACA stuff through GP. So if you haven't reached out to our support team or your client account manager to get assistance from us with this, you're going to want to do that sooner than later. And we can work with you. We'll get HR installed if you don't currently have it, and we'll work through all of these steps in order to get this active. Now, with that said, you're still going to have to edit the W-2 information for this year, but then if you get it all set up properly, it will track from payroll 1 of next year. So I do suggest you go through here and in particular read through here and make sure you've got a clear understanding of what's in here and what you have to track. Now the other thing with that is I believe there is, and I'm going to see if I can find it because I had the link in an email, but it looks like I forgot to. If you haven't been on our website, there's a lot of really good information on here. Our marketing team just does an awesome job in getting all this information out there. But here's the year-end preparedness, and here's the link at the top. But obviously, if you just get out to our website, you can usually find all of this. But here's information on being prepared for the 2015 year-end guide, and it's kind of walking you through stuff on there. And then it does talk about the 1094Cs and the 1095Cs. It's talking about what you should do to kind of get ready. This is definitely a supplement to this year-end tax guide, and some of this stuff we weren't able to get in the guide, but we're putting out on our website that you can get the information. Now there's one more, and if you need this a little bit more information on all of this, and you didn't catch these links and you get lost, you can reach out to your CAM or the support team, or even send us a little message here with your email and say, hey, can you send me the link? But I do believe the links have gone out to most of it. Jen, do you remember where the big one was? It was actually the link to the year-end seminar one. I want to take a stab at this. And
Do you mean to that list of resources on that page?
Yeah.
Sure, hang on.
I'm
I'll paste it in the chat area again for you.
okay. So I've got one more link that I want to show you with the information. Now, if you're on GP 2013 and GP 2015 and you have transferred to the perpetual licensing, you will get HR as part of that. So it's not a separate purchase. So payroll and HR started coming with the GP as soon as you transition to 2013 and 2015. If you're on a prior version, you're not going to get the ACA information. You really need to be in those other modules. So let me put this link out here again.
It doubled up for some reason, sorry.
That's all right. I'll get it out there and just concatenate it here. All right. So we just need to get rid of this. All right. So basically the link, if you're trying to follow, and this is a really good resource, it's www.crestwood.com, and then we've got a /LP/2015/year/end/resources/4/dynamics/GP. Okay, so once we actually have that, so what did I not do right?
You have a less than symbol at the beginning of that URL, Pam.
Yeah, all right. That kind of was off of your paste, by the way.
Yeah, it was. It pastes funny
All
in
right,
the
so
GoToWebinar.
right, so this is a great resource. So take a minute to jot down the URL at the top. So this was put out there specifically for the year-end resources, specifically for our seminars. And not only do we have that information on our blogs that I just showed you, which are great resources, but there's also some more information on the ACA. There's links to the payroll tax updates that you saw in the guide. There's the support team year-end blog. That's where you found, I just showed you some of that. There's a nice preparation checklist. Here is the PDF version of the year-end manual that you can give to other people. And then there's some sales tax information here. So that's a great resource. All right, so before I get in showing you all of this, it looks like we had a couple questions. Can you let me know what those were?
Yep, we have one question that came in. To manually edit the W-2s for ACA reporting, the 1095C, do you have to have the HR module?
You do not have it if you're directly editing the year-end wage file, but you have to have the year-end wage update for them to show up in this edit W-2. So if you're not going to go in and set it up at the HR level to track, you will have access to the 1095C and the dependent window even though you don't have HR installed, as long as you installed the year-end tax update. But you will have to go in there clearly and you will have to mark everything in here. So no, that question would be if you're just going to go directly in here and edit it, you don't have to have the HR module installed. So let's talk about where the information resides. We already know where this is, but in order to get this going and get this set up, we have to have a few things set up. And one of the things is we have to go under our health insurance. We have to have HR installed. Then we have to run a utility that'll bring over all of your existing deductions and benefits from the payroll side. So this is only for people that don't already have HR loaded, that you have to run that utility. But once that's done, then everybody would have to go into the actual health insurance, and you have a couple of windows here that have to be filled out. So any of your health insurance ones, you can now see down here you have a whole section that says Affordable Care Act info. What you have to fill out is you have to fill out this information, and if you don't know what you need to fill out on here, your best bet is to talk to your insurance company if you don't. Now, I don't believe you'd have to know whether you need the safe harbor codes or the original one, but we can't offer you that without knowing everyone's health insurance. So your best choice is to reach out to your health insurance provider and say, all right, what do I need to fill in for these codes? Some of them are fairly explanatory. So then the other thing is what has to show up on the W-2 is what is the lowest cost premium. And what that means is this happens to be single coverage, but let's say this was family. You have to fill in is what is the lowest cost. So what is the cost of a premium if an employee was only insuring themselves? So for the most part, for all your insurance plans that are similar, this would be the same dollar amount, because it's for, if I only insure myself, what is my cost for the employee? So once you fill this out at this level, you can save it, and this information will roll down to the employee's health insurance enrollment. But you have to do some preliminary HR stuff, so you might want to need the assistance to get this going of our support team. Doesn't mean you got to set up full-blown HR. It just means you've got some minimum stuff you need to set up, and this information is also included in some of that checklist information. And like I said, some of this stuff came about after we've had our guide out, so we have chose to get it to you via a website where we can keep it current and up to date. The other information is if you're providing self-insured, if it's self-insured coverage that your employer is providing, then you need to provide the government with some benefit information. And that is also in the HR module. That's under cards, it's under human resources, it's under employee, and it's here independence. And there is a whole section that is covered for your dependents. And it is information right here, the dependent Social Security, gender, date of birth, health insurance coverage. Now, once those are set up, and that information on the health insurance screen has to be set up and will not start tracking until it's set up the very next payroll. So if we put it in now, it's not going to go back and grab the numbers from the payrolls that have already taken place. It will start generating it and creating it for reporting when it gets set up. So that means the majority of you probably still have to manually fill in your numbers for your W-2s. So that's where it takes us to the Edit W-2 screen window in payroll. And that's where we've got to go in, and I'm going to bring up. So what you have to fill in, and like I said, you only need to fill this dependence in for that self-insured requirement, but the 1095C you need to fill in, this is the coverage, and then this is that employee share. So remember, that's based on employing the self, the individual. You would need to fill this in for each month that they were covered. And then I believe this is the safe harbor. So if you don't have to report safe harbor, and like I said, I can't make that determination for you, your health insurance provider should. So you're either filling in this section or you're filling in this section. Once you have, and you're going to have to do that for each employee in order to have that properly on the W-2. Once you have this set up and you start running payrolls, then next year this stuff will be all populated for you. Now, in order to print them, they're part of the same print process. And what you've got is you've got the 1095C, which goes to the employee, and then the 1094C transmittal, which gets submitted to the government. So the 1094C once we have this all loaded, now, I'm not going to end up with any because I don't have any information filled out, but these are fully printed. So these are in the format that they need to be. So you can see that you don't have to have special forms for these. These will print out on the paper with the full form. And the information, basically you can see we're missing, whoops, I want to click on that. We're missing the information down in part 2. And then part 3 is only for if the employer provided self-insured coverage. But the part 2 is what you need to fill out in all of those boxes. So then once that's done, you will have a 1094 transmittal, and it will also print that, and that's basically the summary of everything that goes to the government. All right, so there's some great information on our website, as well as there are obviously other links out there on what is required in order to report your ACA. Basically, I just showed you what you have to do at GP in order to track it and get it on the W-2. But your best resource in determining if you're required to file and what you're required to file is to talk with your health insurance insurer. So any questions on any of the ACA, any of the payroll process, anything somebody wants to see where we just kind of went over it quickly, a little more detail, any questions, anybody concerns about getting resources? I pretty much open the floor up for questions.
I have a general one that came in, Pam. Nothing specific to GP, but do you know if that applies to companies if they have less than 50 full-time employees?
It does not. It is not a required reporting for employees less than 50. But just to be sure, I still, you still might want to check with your, I mean, there's a few exceptions, but for the most part, you have to have 50 or above employees. I know it's a lot of material we covered. You know, we went through in detail what we could, tried to slow down some of it, but it is all listed in detail in the guide with the exception of the ACA, and that's where you want to go to our website to get those resources. And our support team is studied up on all of it and is just waiting to help you through the transition.
Thanks, Pam. Let's give people a minute and see if they're frantically typing in all sorts of questions for you.
Either that or they're not awake anymore.
You didn't put me to sleep today. I think I slept through the last presentation. I took a little nap in the back of the room after lunch.
Yeah, I know. I saw you.
Hopefully I wasn't snoring too loud.
No, I don't think you were.
All right, I have another question for you. If we have other payroll updates that need to be done, can we just do the automatic ones with the year-end tax update?
The year-end tax update does not update those tax tables. If you need to get caught up and you feel you need to get a more current one, you would want to run the separate routine. But it is very quick, and if you did it today, I mean, like immediately after hanging up from here, you'll get all caught up, and it really is very simple. Tools, customize, or excuse me, maintenance, payroll tax updates, checks for updates, do automatic, put in your authorization number. If you're uncertain, reach out to the CAM team. They can get that for you, and boom, it'll be done. But it is independent of the tax update does not deal with tax table updates. However, if you installed the one in January, you probably don't need the other ones, so you probably should be good to go, but as long as 2016 isn't out there, you can use this automatic, and it really is very simple and very quick, and it only's got to be done on one workstation, and it updates the table.
Thanks, Pam. I don't see any more coming in quite yet. I'll give people a minute to type.
So we'll stay on the line, see if there's a couple others. Feel free to reach out to our support team if you think of something after the fact.
Oh, I got another for you. I think they mean the Microsoft GP blog series mentions a 2016 round 1 tax update and a round 2 update.
Yes.
Have we discussed the round 2 update at all yet?
What that is that's the Microsoft one. It has, neither of them have come out yet. They get done the same way as the see if I can get back to the GP one here. They get done the same way as the tax ones I just walked through, but they're not out there yet. So basically, round 1 2016 says there's changes to federal, which means when this comes out, and there always is because they up the Medicare limit and things like that, but when this comes out and it looks like it's due out next week, everybody wants round 1. Round 2, it looks like so far Maine is the only one that's due to have a change and a release, but neither of these are out yet. And good point about the blog series. One of the things that we put out updates that pertain to some payroll stuff and things like that, and so our marketing team will do some email blasts and things like that and newsletters. So if you want to make sure you're part of those, and particularly like the payroll ones, reach out to our marketing team, and you could probably reach out to Jen directly. So Jen, I don't know if you have a way of posting that to everybody or you want to give them your email, or you can reach out to your CAM, and that's a great way to try to stay up to date on when we get things out there, especially pertain to payroll.
Thanks, Pam. Everyone has my email. When you registered for the webinar, I'm the one who sent back the confirmations and the reminders. And if you don't have my email, I'll go ahead and put it in the chat area for you also.
So Jen is part of our marketing team that puts together a lot of that blog information and works on making, putting together newsletters for our clients. And one of the things, particularly for our payroll clients, is we want to make sure that in our records you get marked as a payroll client, and then you just need to let us know, like, hey, these are the people I want to get payroll newsletters or things like that, and we'll do our best to kind of get them on that list so that when major things come out. Another way is if it's not going to slow your system down, one of the things in your home screen of your GP is this eConnect area, which kind of scrolls information, and this is basically related to the GP. So this is not ours, this is Microsoft. So we've got Microsoft's Dynamic GP Year-End Closing blog series, and so Microsoft puts out information too on here. And a lot of times they'll put out stuff like if a new service pack comes out or a new tax update or things like that. Now some clients, and you can see right here, it just brought up their blog series, and it's got information on year end just like our blog series does. But one of the things about that is you can see right here you've got information on year ends approaching, are you prepared, if there's tax updates and things like that. Now some clients have said it has slowed their system down, and part of that just has to do with how well your workstation and GP communicate with the internet. So if this works for you and you don't have to have this closed, there is a lot of stuff that's scrolled across here that's coming directly from Microsoft. And it looks like Jen has posted some information of our blog links as well as her email address if you're interested in getting a lot of that information. And like I said, that's where you find the most current stuff. You know, we had to print this manual a month ago when things were different, and so that's why you've got as much as we can in there, but the real current relevant stuff is probably going to be on that blog website.
Thanks, Pam. Another quick question came through. Do the 1095s print one page per employee?
Yes.
Okay.
So just plain paper on your laser printer. And I don't know, I think they're foldable, that you fold them up. They're designed to be folded up and put into regular letter envelopes, I'm sure. I'm not aware that there's something that can be folded into window envelopes. I think they're designed to be a full page form that get full. I mean, I guess they haven't printed one out, but my understanding is they're a full page tax form that just kind of get folded like a letter and go in envelopes.
Thanks, Pam. I don't have any other questions in there yet.
Okay.
If we're done and people are leaving the webinar, if you wouldn't mind taking a few minutes and filling out the short survey screen that pops up, we would appreciate that.
Yeah, let us know what worked for you with the webinar. It's kind of hard to not do a face-to-face, and it's kind of hard for me. I'm just kind of staring at my screen, and I don't get that interaction with you. But let us know, you know, what worked. You know, if you felt like there's some spots maybe I kind of got lost in the navigation and you couldn't follow along, you know, just some feedback that'll help us, you know, kind of make the webinar experience as good as we can, because it is a little bit different than sitting in a classroom in front of people.
Do you have a moment to show someone how you would set up vacation or sick time?
Well, through GP, yes. Through HR is a little bit different. I can kind of show real quick.
Or maybe where to go to get more information on how to do that?
Yeah, well, you can get it in the help manual if you're in GP. If you go into, you can go about this window or you can do the printable manuals. If you do the printable manuals, it's basically in payroll. But if you want to just kind of get to the general screen, there's a very simple accrual within payroll. And
Pam, it looks like they're looking to set it up through GP. They want to set up hour tracking, if that helps.
Yeah, if it's just through payroll and not the HR module, that's a very basic tracking. And so the first thing you need to do is we need to make sure that it's not set up through HR if you have HR. Now, I think mine is set up through HR. If you don't have HR loaded, then you won't see that option. But
they don't. The attendee said they do not have HR.
Okay. So what I need to do first of all, though, is I have to actually, I have to turn it off for me because you need to see the screen. All right. So you don't need to do that, but I had to. All right. So what you do is you set it up on the employee screen. So if we actually go into, and this is the very basic, okay, so we're not setting up more complex accrual schedules or anything. That would be done in other areas. But the straight out of the box basic payroll one, if you go into the employee, you'll see a vacation and sick down here in the bottom right-hand corner. And if you click on this, you get a couple options to set up. So you can mark these to be accrued vacation, and then you can decide, are you doing that based on hour works or set hours? And then how much hours per, like if I do set hours, then I have hours per pay run. If I do hours worked, then it's how many hours in a year. And then the available basically starts accruing. And you can edit this if it gets off. But you'd set up vacation, you set up sick, and then you can mark if I want to warn if it's below that. And then the other thing you have to decide is what adds into the accrual and what takes away. So once you have that set up at the employee level, that kind of gets them accruing. And you can do, like some employers just throw a lump sum at the beginning of the year and it doesn't accrue every payroll. They just throw a big lump sum in there. And that's where you put the hours per year and they just keep reducing. So in payroll, basically it depends on the pay type and the pay code. So in our pay code, any pay code that has a pay, let me bring up an employee. So any pay code here that has a pay type, I probably got to clear this to show you the pay type here. So any pay code that has a particular pay type, if it has a pay type, a vacation, when we take vacation, it reduces that vacation balance. If it has a pay type of sick, it reduces the sick balance. Then in order to, if you're doing this based on hours, in order to determine which hours go toward accrual, so if you're saying, hey, you got to work 40 hours to accrue so many hours of vacation, you have to mark which pay codes will accrue vacation. And all you do is you mark them in here and you can roll it down to the employee. And you only got to do the accrual part if you're doing it based on hours versus just giving them a lump sum at the beginning of the year based on kind of longevity. So that's kind of my 60-second overview on how to do that. Now, if you need any information on a lot of that, the best thing is a real quick guide, is if you go back into the vacation and sick, and you can go up to a help here and go about this window, and here's all your information, and you can kind of see your accrual methods for vacation and sick. You can drill down to see what goes in the fields and stuff, but just navigating right through there gives you a pretty good idea how to get this set up and running without reading a whole big manual.
Thanks, Pam. I don't have any more for you yet.
All right. We'll hang in there till about a couple more minutes here.
Okay. You ready for another, Pam?
Sure.
Is the user date different than the system date regarding running the 2016 payroll in 2015?
The user date in the system, and basically the user date by default is the system date unless you change it. So down here in the bottom left-hand corner, this defaults to the system date, but you can click on it and actually change it, and then that changes the user date. So this is in like particular if you're running like quarterly reports and stuff like that. So they are different, but they default to the same unless you click on here and change the user date. So you usually need to do this when you're running, like if it's January and you want to run last year's quarterly reports. So what you usually do there, now keep in mind this will stay the date you mark unless you change it back or you log off of GP and log back in. When you first log into GP, it defaults your system date which is your computer date in here. But like if you're going to go and you want to run your reports, and this happens when you're kind of like running your period end reports and things like that. This is strictly date driven, so there's no problem. But when you're doing things that are based on months, like these quarters right here, you have to backdate in order to run October, November, and December of last year's if you're already in the new year. So that's where this comes into play. So that's where you want to change your user date in order to get this printed after you roll into January. But from a GP standpoint, other than like these reportings, it really is based on, you know, kind of the system date. So you don't have to close the year right in the year. Like I could create my year-end wage file January 31st if I wanted, if I hadn't done another payroll and loaded my tax tables. So hopefully that answers the question about user date. If not, just send out another question. And at this point, we don't have that many people on the line. You could almost open up everyone's microphone, but then we'd probably hear people snoring.
Thanks, Pam.
So if that doesn't answer your question, just reach out again here with a different specific information. But all right, if you don't have any more coming in there.
I don't, and the battery's dying on my headset, so we should wrap things up.
So I just want to thank everyone for hanging in there with us. Please fill out your